Please, allow me to show you something.
Black, run that shit back, man.
go ahead and make sure you click that link, get you some Teej Hanley, and support the Media Man YouTube channel, and also support Teej Hanley. Good morning. Welcome back to another Media Man Live on this great Sunday. Man, I am excited for the investments in the stock episode. So if you guys have been tracking how we've been doing these financial live streams, we started off with basic budgeting, right? We went over, the key elements, the 50, 30, 20 rule. We tried to make sure that everybody was aware of how a budget looks in different cities. We did about 5 live streams on that. And, like I told you guys, I was going to start from the ground up. We can build ourselves up, moving towards investing, which leads us to today's show. So let me get this out of the way. This is not financial advice. This is just strictly for educational purposes only. I'm trying to get you guys aware and help you understand that simply working a job 9 to 5 for the rest of your life will not generate generational wealth. It's a popular buzzword in the Black communities these days. So I just wanted to help you guys understand that just simply working will not help you become rich. However, working that 9 to 5 and putting your money in the right places and watching it grow can definitely get you to the positions where you don't have to worry about money anymore, especially in your older years. And that's why we're doing this show. It's to familiarize you guys with the investment, stock market, some ups, some downs, and hopefully you guys will have, anybody who's unaware will have a better understanding of how to grow money or how to make your money work for you instead of sitting it in your savings account where it's only acquiring a small amount of interest, where you could be putting that money into the market and you can see it grow exponentially. However, I will say this. Please do not, and I repeat, do not invest in the stock market if you have a large amount of debt and or you are moving money from a particular bill in order to invest. That is not the way you do it. The money that I'm talking about that you're supposed to invest is for the guys and the ladies who have a little bit of income left over and they want to make it work, where all their bills are paid and they are typically financially stable. As I just told you guys, 78% of the United States lives paycheck to paycheck. Only 22% are financially stable. So that should tell you something. So yes, it is always a good thing to invest in the stock market, but you want to put priorities first, which means getting rid of that high interest rate debt if you have any. And then you could start thinking about investing. And then you could start thinking about diversifying your portfolio, getting into real estate and things of that nature. However, today we're going to discuss specifically investing, stocks and bonds, EFTs. And let me make sure ETFs, because I'll mix it in the military. We have a saying, I forgot what it stands for. It's EFTs and ETFs. I always get that mixed up. So if I make the mistake of of saying EFTs instead of ETFs, then don't ding me for that. It's just because the military has a phrase and I forgot what it's called, but it's just in my head. So whichever one that is, I'm gonna mess it up a couple of times. But yeah, this would be a definitely educational show. Hold on, let me make sure. 1 second, hold on, because I know I'm gonna mess this up a couple times. Let's see here. Let me just make sure I got this up. So, and I got to keep remembering exchange traded fund, even though I love the ETFs, because I'm going to mess it up. I promise you guys. I know it's going to happen, but this is going to be a great show. I have a lot to cover for you guys, like I said. And once you guys seen the traction on my community post, I created an account with Charles Schwab. That is not my primary investing website. I use E-Trade, right? And I use Webull. So opening this is strictly for the Media Man live stream. And as you guys saw on the community post, I put in $500 of my own money. And you guys are going to pick the stocks for me to invest in. Like I said, you're going to make that $500 work. And again, you are not liable for me losing money. I put that money in there with the sole purpose of education and to see how we can do until the year's end and see if that account can grow. And then also at the end of the show, once we get done with the educational portion of it, we're going to invest on Investopedia, on the simulator. We have $100,000 of disposable income. However, we will not use that whole $100,000 because primarily the people who invest and you start to invest, you typically start with about 15 to 20% of your annual income after taxes, right? So what we're going to do is use about $15,000 to $20,000 to invest into the stock market. So if I got all my money men and my money women in here, you guys are going to be needed because you guys are going to be picking and choosing our baseline stocks, our baseline ETFs, and we're going to see how this grows over time and see if we can increase our rankings on the website. So I heard you guys requested this video or this live stream. You guys say that you're in the stock market. So you better have your thinking caps on. You know what I'm saying? Use your antennas because this is going to be fun. Because this is going to reflect on my live stream to see how educated we are on this. And we're going to check it every time I live stream. I'm going to open it up and I'm going to let you guys know the progress. But first, we're going to start with where we rank and then we're going to move forward. And I'm going to do the same thing for my Charles Schwab account. So if we're in the red, you guys will see it. If we're in the green, you guys will see it. Transparency. And then if we need to do an update every month, then that's what we're going to do. So like I said, this took a lot of research just to make sure it was palatable because I could not just sit up here and talk about dividends and, limits and market. I couldn't do that because y'all will get put to sleep. So I'm going to make sure that I got a lot of videos and also some references that you guys are familiar with and also showing you the dark side of investing. And you're going to see a common theme here once we start the show. And I know I'm going a little bit long on the monologue, but I have to because I want you guys to understand that, yes, this is the way that you can pull yourselves, and be one of the first ones in your family to, acquire that generational wealth. So where when you pass, if you have children, you can leave them with something. Okay. That was one of my main goals. I did not want to leave my daughter ass out once I kicked the bucket. So investing, having a great woman, to help me with that. And also one of my old troops that actually got me into the stock market. I was very blessed. Right. And so I want you guys to feel that same financial freedom that I did. Okay. And I continue to do. So I'm here to help. It's going to be great. I can't wait. So let's see here. We got super chats. Like I said, it took a lot of work to do this. So I'm gonna just let y'all know right now, especially on a Sunday, right before the year ends or the month ends. JT Coin Rings with the 199 super chat. He said, "Hello, media man and chat. Appreciate it, good brother." We got Ghost Beard in the building. What's going on? He said with the $10 super chat, great plays. Thank you, brother. Appreciate that. And let me make sure I, shout out the moderators. We got Pooh Man in the building. Thank you, sir, for being in here early and promoting the Survive For Me YouTube channel. Thank you, brother. Let's see. And we got Mona D in the building. Thank you. Hello, Mona D. Thank you for being here. I know it's Sunday. We had to go to church online. I'm doing this for y'all. So God, don't smite me down. It's the chat's fault. So it's a subscriber's fault that I'm here on this good Sunday. Let's see here. All right. Woke Quill, $5 said, "Thank you for doing this. Looking forward to this experiment." Oh, yeah. This is going to be fun. I promise y'all that. I like doing these innovative shows. We had the little dating and ranking show. So this is another one. And we got the man, Dante Bryan, in the building. $5 super chat. He said, "Brother Double M, just remember you were doing the live." Yeah, man. Hey, we in here. So, I can't wait, man. We're going to get into it right now. But before we start, let me show y'all this. Let me remind you.
For lack of a better word, greed, for lack of a better word, is good. Greed is right. Greed works.
How much is enough, Gordon?
The richest 1% of this country owns half our country's wealth, $5 trillion.
Hey, Gordon. Looking good.
My God. Bud Fox.
All right. 2 Wall Street movies in there. I wanted to remind you guys that when Michael Douglas said that in his first installment of his Wall Street movie, he said greed is good. You can either buy into that or not. But on the stock market, The people that tend to do well are the people that are willing to take risk. I am not one of those people. And I want to explain to you guys that there is a difference between a stock trader and a stock investor. I am a stock investor. I don't mind waiting it out. A stock trader is very aggressive because you have to be. You have to be very savvy in regards to the stock charts. You need to know what candlesticks, wicks, all this type of stuff because you are a trader. You do this every day. I like to sit on my shares. I like to invest frequently, reinvest my dividends, and I like to see my money grow. So I want to be clear. This is going to determine if you are a trader or a stock investor. Two different things. Now, if you want to do both, that is possible. But when you first start to get into the stock market, you probably want to choose your lane because you're going to put more of your, training and education into that field. Me, I decided to go the investment route because I don't, I'm good right now and I'm not really trying to rock the boat. However, I do dip my foot into the trader, day trader thing sometimes. I did it in, I think last month or whatever, see how everything would go. But like I said, on the stock market, you have to be willing to lose money. Just as you want to earn, you have to be willing to lose it. And that's why I keep saying that if you are going to invest, this should not be money that you're tied to or it's allocated to something else. Like, for instance, if your rent or mortgage is $2,000 and you got a good tip on some stock that's supposed to increase and you put that $2,000 into the investment market and you lose it all, don't blame the stock market. Blame your dumbass self because that money is allocated for something else. Don't do that. Okay? It's somewhat like gambling. I'm not a gambler. I don't go to Vegas to gamble. I like to see the shows, so on and so forth. However, people who do gamble, they sometimes do well on the stock market because those type of people like to take risk, especially with, with money that they're not supposed to be using. So I just wanted to remind you guys that, hey, this is serious business. So make sure you have some money set aside. You're going to keep hearing me say this multiple times. This is one of those educational pieces that I'm trying to save you guys from making a big mistake because it is a great opportunity to make a lot of money. Seriously, that's how the wealthy acquire their ends. And I'm going to just let you know that right now. It is not from simply working 9 to 5. And I need the Black community to understand this more than ever because we are making a lot of money. I think our estimated growth, and I shout out to, I'm going to play his video here in a second. Or later on in the show, if I could get it. Let me get his name right. He tagged me in this video, and I want to give him credit for this before we move forward. If I still have it. Yeah, okay. Inspirational Truth on TikTok. He just put out a video saying that the Black economic power, economic power is going to be 1.8 trillion in 2024. So the Black community is not broke. We just rank last in the states. Okay. So we have the money. We just need to know where to put it and put it in the right places. And that's why we're here. And that's why we have some educated folks in the chat that's going to help as well. Okay. So I just wanted to play that. Greed is good until it ain't. All right. So let me see here. Let me get this super chats real quick. I saw a couple of them. Limelight one, $10 super chat said, I'm so happy we doing the switch up on them. Yeah, man. We gonna hey, y'all gonna get to this money. Sir, the $5 super chat said trading in a language, learn what the candles mean, learn what the patterns mean. You can stay in cash and look for HRs with options. Okay. Let's see here. Did I miss any? Azriel, what's going on, brother? He said, greed is good. Call me the Black Gordon Gecko. Oh, man. This is going to be an amazing show. So let me get to it. Hold on. Let me pull this up real quick. So I know you guys remember this movie, and it's one of my favorites of all time. If you guys don't know, I'm a huge Eddie Murphy fan. So, Trading Places, one of my favorite movies of all time. And you guys, my goodness, And I know if you know Trading Places, man, you probably laughed. And it is a Christmas movie. I don't care what anybody says. Trading Places is definitely a Christmas movie. It was filmed on Christmas. You know what I'm saying? So we good to go. You know what I'm saying? So yeah, so I brought this movie up because we're about to talk about stocks and bonds and investing and so on and so forth. But if you guys don't know, Trading Places is simply the plot of the movie is about two brothers, Randolph and Mortimer Duke, and they were commodities brokers, which means that they earn a commission for matching buyers and sellers, and that could be for options and futures. So the main commodity of the movie, if you guys remember, was what? Frozen orange juice. Crazy, right? So the futures production forecast, which is typically released around, I want to say January, the beginning of the year. And in the movie, they released it in January, which made sense. And so the Dukes got a hold of the production report, which they thought was a production report, which showed a shortage in production, right? And let me explain what that means here. So if you get a report that said that there's a shortage in production of oranges due to a bad winter, it damages the crops. What is that going to do to the price? Who's in the comment section? Who's familiar with that? Let me say that again. So if the crop report states that there's going to be a shortage of oranges, for this year's production, what is that going to do to the price of the frozen orange juice? Is it going to go up or is the price going to go down? Who's in there? Let me see. Who's in here? Let me see who we got. Let's see here. Okay, here we go. Jamal Obama said the demand goes up. There we go. Okay, the price goes up. Hey, we got some. Y'all loaded. Little test there. Okay. So if you guys don't understand it, for those who don't understand, I see you guys in the comments. Thank you for tuning or for chiming in. So if there's going to be less oranges, then that means that there's going to be more of a demand, right? So that's going to increase the price. So what the Dukes had in mind was that since they got this insider information that the price was going, it was going to essentially go up because of the shortage, then they decided to buy everything because they don't have to, they can buy at a low price and then they can sell at the higher price once it goes up in the future. Hence, futures. Okay? Hopefully that makes sense. So that's what their goal was. But what makes this movie so amazing? Oh man, it had a lot of influence on the market, if you guys don't know, moving forward. And I'm gonna give you a little fun fact here in a second. So since they brought as much frozen orange juice as they could once the trading day bell opened, so when they started to buy, other traders started to notice that they started to buy. And once you have some good brokers and they have a great name on the stock market, people are going to look towards what you are doing. So that's going to tell people, hey, if they're buying, then we should buy, right? Which will make sense. So that drives the price up even more. It actually, and there's a term on the investment market, is called momentum investing. So if you have somebody that's tried and true, and I know you guys know who Warren Buffett is, if he says that ETFs are good, then people are going to be like, you know what? Maybe you need to look into purchasing some ETFs because Warren Buffett said it. And this is exactly what happened in the movie. So when they saw that the Dukes were buying it up, they started buying. Price goes way up. And I think you guys are familiar with this. You seen what happened with GameStop and like Dogecoin, was a lot of people buying. So people started to buy and then they started to sell and all that stuff went out to, it was crazy. It was a crazy time during that. And Netflix has a special that you can watch on that on the GameStop, boom. I remember that. That was so crazy. But yeah, so when Billy Ray, who is Eddie Murphy, and Lewis, who is Dan Aykroyd, they sold a large amount of their shares. They didn't have that much capital, but the stuff that they did, they sold a large amount of their shares. They didn't really have the actual oranges. They were just selling the contracts, right? Or whatever they were going to buy in the future or something like that. So the tide shifted and everyone began to sell. So at that time, the Secretary of Agriculture, he read the citrus report forecast, and he said that the winter didn't affect the oranges, which means that the frozen orange juice is predicted to be in abundance, which means what? The price will be lower once it's time to start selling, which is in April, right? So you guys remember that scene on the train in the movie where they switched briefcases? That was them putting false information into the guy that was stealing the insider information for the Dukes. So if the Dukes would have got the actual report that said that, hey, the winter did not affect the oranges, then what would have happened? The Dukes would have sold because the price would have been lower. But since they switched it, it messed them all up to the tune of I think they owed $394 million at the end of the market's closing. But there was an error in the movie. And of course, when I watched this when I was younger, I didn't catch it because I didn't know anything about the stock market. But if you guys know the error, you probably understand this as well. Orange juice payment isn't expected until April. So in the movie, remember, they got hit in January. So they still have 3 months within that time where there could potentially be a change in the weather, right? So instead of the crop not being affected, let's say in February that there's a storm front that hits and it wipes out half of the orange market or the orange crops. Then the price would go up and the Dukes would essentially possibly be saved. But I mean, you don't know that now, but I'm pretty sure because of the movie that was at the end. So they couldn't wait until April to be like, hey, y'all owe this money, which essentially made them bankrupt, and they actually ended up on the street. If you guys remember on Coming to America, they had some cameos where when Eddie Murphy was walking with Lisa, it was two bums, and he went into his pocket and he pulled out a money clip of a gang of money, and it was the Dukes. It was like Randolph, and he gave them the money, and they was like, "We back." And I always wanted them to have their own movie, man, because it was a great scheme that they did, But I mean, I just wish they would have did it like a part 2 or something like that. But that's me being selfish. But I do want to show you guys something here. Let me see here. Where is it? Where is that? I thought I had it up. I guess I didn't. But anyway. So based off of that movie, prior to that, what the Dukes did wasn't illegal. Did you guys know that? And actually on the stock market now, I'm going to read it to you guys if you guys think I'm crazy. It's actually called the Eddie Murphy rule on the stock market. And it's basically, they called it the Eddie Murphy rule because you cannot use non-public information misappropriated from a government source. And then it says, where are we? About more than orange juice and commodities trading, the Eddie Murphy rule reminds us that information moves the markets. So they actually had to put a rule into the market from basically saying that you can't do this. But prior to that, there wasn't any. So, and again, in the movie, that's the reason why the Dukes weren't put in jail, because nobody knew what they did. They just lost money. So they essentially went bankrupt. So they didn't get arrested because nobody knew and it wasn't illegal. But now after the movie, and look it up if you guys think I'm lying, it's called the Eddie Murphy rule. The SEC implemented it after the movie. Crazy, right? So that movie had a lot of influence, and it's definitely, a viable, I guess, reference point for any types of discussions that we have in these spaces on investing. So yeah, so go check it out. Y'all think of y'all go check it out. But yeah, it was a great movie. So I wanted to give y'all a little bit of history about that. So let me see super chats real quick. And I'm gonna be stopping periodically to get the super chats. My bad. Dante Bryant, $5 super chat said, weren't Duke and Mortimer? Yeah, okay, Coming to America. Yeah, I just said that. Okay, my bad. Oh man. So yeah, so this is good. So hopefully you guys understand how futures work. You know, you buy if it's not gonna be affected, you know, the crops or whatever, using the oranges for example, then you will buy buy low and then sell high or whatever. So it depends on the market. So let's see here. All right, let's get to it. Where I want to go next. There's so many, but like I said, I wanted to drive home the point of being greedy before we get into, you know, the learning aspect. And it's not my point to scare you guys. It's just to keep you aware. Be level-headed, be smart about your investments and your trading, and I think you will do just fine. Nothing is a guarantee, and I wanted to put this out here before we get started. And I have a little PowerPoint, of course. You know me. I always like to do PowerPoints just so we can understand what the hell is going on. But before we get into this next video, this point applies. Let me show you guys. The only sure thing on the market is death and taxes. I don't gamble, but trading on the stock market is the closest thing. Okay. And you remember, like I said, trading, right? So I just want you guys to remember that. So we're about to watch a video that's probably going to scare a lot of people, especially rich folks. Let me show you this. Let me show you this real quick. Where is it? This is going to be good. Why am I happy about this? Hold on. Let me bring this up real quick. See if y'all recognize this face. All right. Y'all know who that is? I'll give you a couple seconds. Who is that? Y'all know who this is? Just off face alone? Give you a second. Give you a couple seconds. All right. We got 70 folks in there. You said Rich Dad, Poor Dad. Let's see here. It said Creator Ramen. Pat Morita. Y'all, wow. All right. Since nobody got it, let's get to it.
On the afternoon of March 22nd, Viacom CBS announced a stock and convertible bond sale. The company wanted to raise $3 billion.
Here was a stock Bill Huang was really invested in. He had a huge outsized position in it. Every time the stock moved up, he would throw more money into it, and the stock would keep going up and up and up and up.
So that was Bill Huang. He is the first and only man to lose $20 billion and not in divorce. That was funny to me. It's Bill Huang. If you guys haven't heard this story, he is now currently on trial. And this is going to tell you why. Here we go.
Instead of helping the stock, this stock sale hurt the stock terribly. The following day, Viacom CBS went down 9%. On the Wednesday, it went down 23%. With the stock declining that far that fast, it forced a margin call. A margin call is a demand by Wall Street firms for more collateral. If you've borrowed so much money that all of a sudden there's no equity left after a stock drops that quickly, the firm will demand more collateral.
All right, and I want to stop right there. So when you're rich, you can go into any bank and ask for an absurd amount of money, and they will loan it to you. This is what Bill Huang was doing. He was borrowing money and investing it into his favorite stock. So he will pump more money that had been loaned to him, and the stock would increase. When the stock would do well, he would put more money into it because he was in love with that particular stock, Viacom. But he borrowed money to invest. And that's I know you guys heard that. With rich folks, I heard some people talking about flipping and stuff. When I get $1 million, I'm gonna go ask for $1 million on the bank. They can loan it to me, so on and so forth. Okay, so let's continue.
If Bill Hwang has no money left or refuses to put up any further money, the dealing firm takes over his position. The Wall Street dealers pleaded with Bill Hwang to sell some stock so that he would at least survive. He might take some losses. From $20 billion, he might go down to 10 or perhaps even less, but he would live to fight another day. And Bill Hwang refused.
So, why did he refuse? Why did he refuse to sell? Greed. Greed. And you guys are going to hear a familiar, it's a trend. Greed. Once you get into the stock market, hey, it's tough to get out saying I'm going to take a loss. I'm not willing to do that. So I'm going to go ahead and ride it out. That's why he stayed in there. Ego as well. But he was driven by a higher power. So, he says, and he going to tell you what the exact higher power is. So he was investing for somebody else, not him. So
If it was just one bank making the demand, that might have been fine. When all his banks made the same demand, you knew you had a problem, and really, that was the beginning of the end for Bill Hwang. Any fortune built on borrowed money is standing on a shaky base. A gust of wind could threaten it. In the case of Bill Hwang, he was facing down a hurricane. Names that he had plowed billions of dollars into were moving against him, and he never had any effective hedge. The banks had started to panic, they had loaned him a lot of money, and they were demanding that he needs to post a lot more cash, otherwise they would have to terminate the agreement and liquidate his portfolio. He did not have enough spare cash lying around, and they did have to cut their ties and liquidate his entire portfolio.
So liquidate his entire portfolio, meaning that he had shares in companies to where, they had to be turned into money. So they had to liquidate it so they can get their money back. And this is essentially how he lost all that money. That's what happens. And that's how he was able to borrow, because when you have shares in a particular stock, and I keep messing this up. I was just looking at this. It's something to do with taxes or some shit like that. I know, I think who was in here that educated us on that. But yeah, I always forget about that. But yeah, there's something to do with taxes where you keep all your money in your shares of the company, which is something that Elon Musk does. Yeah, so tax breaks. Let's continue.
In the end, Bill Hwang lost it all. But not just that. The banks that had lent him money, they also lost quite the fortune.
Think of Archegos as a burning building and its bank lenders as the people trapped inside. The moment one of those banks makes a break for the exit, all hell breaks loose.
You had someone like Credit Suisse losing $5.5 billion, Nomura in Japan losing in excess of $2.5 billion, and yet you had banks like Goldman Sachs, Wells Fargo, Deutsche Bank, who seem to have escaped this largely unscathed.
In total, you've got $30 billion wiped out in the space of a week. The last person out of the burn.
Did y'all hear that? $35 billion in less than a week. Lord have mercy. And y'all see the other week, I was mad that Progressive increased my insurance by $12. And I was mad. Just imagine you lose $35 billion in a week. Man, here we go.
Burning building is the one who always sustains the greatest damage. In this case, that was Credit Suisse.
It was only in the days after that that we were able to piece together what really happened and the root cause behind it all.
A whale is Wall Street slang for someone who wields outsized influence in financial markets. It's like looking at the ocean and seeing a glass-like surface, but under the surface is this enormous, enormous creature. That's what Bill Wong was like to Wall Street. He was an invisible whale. Almost nobody had ever heard his name, and nobody had ever heard the name of his firm.
And that all goes back to this financial instrument that he used, which was swaps. Now, what are swaps?
Swaps are a type of derivative that allows you to effectively remain invisible. Instead of your name showing up in securities filings, it's the name of the firm you're dealing with that shows up. So it could be Credit Suisse, it could be Goldman Sachs, it could be Deutsche Bank.
It's the bank.
That was actually smart on his part. I mean, to stay anonymous, because that's why nobody knew who he was. It just knew somebody was pumping a lot of money into this particular stock and, you know, was doing fairly well. But like I said, the market can be good until it's not. And if you have a lot of money in a particular stock, which is why I encourage diversifying your portfolio, then you could lose everything, you know, in one fell swoop, just depending on the consumer market, whatever you're invested in. And we're going to go into that even more and how to, you know, somewhat protect yourselves on the stock market. But just understand that if you're not diversified and you just banking on one thing, it could go bad. So, and he learned. So let's continue.
That appeared as the stockholders, and he was the one benefiting from the move in the price of the stock. And that would allow him to remain anonymous through that process.
The people familiar with Archegos, both its accounts and its positions, spoke to us on the condition of anonymity because they weren't authorized to comment.
We don't really have a good idea what Bill Wong has left. We know he's got a suburban home in New Jersey. We know he drove a Hyundai. Presumably he's still got that. But we're not aware of any other investments that he may have had. But with so little financial disclosure available, it's very difficult for anybody to have a really solid idea of what Bill Wong has left after this collapse.
The only saving grace, perhaps, from this entire fiasco is that we really haven't seen a systemic problem. We really haven't seen banks en masse pull back risk, expose more hedge funds to the problems, and see more dominoes falling. However, what is the lesson that we all learn from what happened to Archegos? So far, the prime brokerage business hadn't been top of mind for regulators, hadn't been top of mind for politicians, but you've had both entities jumping into the fray for now demanding answers, for now trying to figure out how stable and sound the system was. You don't want these invisible whales out there who have great outsized holdings in stocks and no one knows about it. So the same disclosure rules that apply for hedge funds will possibly be the case going forward for family offices.
So let me just explain something here. And this is actually an issue with companies in the stock market because sometimes they put their trust into rich people too much. And they don't ask enough questions. And that's why they're starting to do these things to where they have more regulators to understand where money is coming from. What is this company? Because you guys heard multiple times, nobody even knew who this guy was. Nobody had heard of the company. They just saw a lot of money and they ran with it. And that's what tends to happen because remember, there's a saying, everybody has a price, right? So the more you keep going up, if you know, and I'll use one of these dating scenarios as an example. How you think these Dubai dudes get these women to go over there and get pooped on? Everybody has a price. Because it's like, you know, you ask one of these ladies over here, like, man, will you go over there and get pooped on for $500? Hell no. You know, what about 5,000? I mean, a month? You know, well, what if I give you 25,000 and you go over there and you get pooped on? You know, when's my flight? That's what they gonna say. So, so that's what happens on the market as well. You see a lot of money. Hey, it is what it is. So let's continue. Fair use.
Bill Wong has undoubtedly suffered some reputational damage as a result of the collapse of his firm. And it's hard not to see the irony in this story. On the one hand, you've got Bill Wong, the pillar of his church community. And on the other, you have this guy who's making wildly speculative bets with enormous amounts of borrowed money. It's so hard to bring those two people together into the same person, which is why we keep asking ourselves, why?
Man, they said asking ourselves why is because of greed. And also, like I alluded to before, Bill Wong said that he was investing for God. God told him to do that. So that's why he was, going hard in the paint for the stock that he had invested in and he didn't want to fold because God was telling him to do what he did. That's what he said. And you guys, it's a whole video on YouTube, so I'll only cut it up just so you guys can get the gist of what the overarching point was. So religion is a powerful tool, man. And that's why I like the movie The Book of Eli so much, because it shows you how powerful just that one book can be. You can lead millions of people, right? And, if it's in the wrong hands, then it could be used for evil. And, I won't say that, Bill Wong is evil. I'm just saying that he should have cut his losses and got out, or at least diversified to where he had his money in other areas. But like they said, he didn't live a lavish life. He was living in New Jersey, I believe Cherry Hill. And he had, his little Hyundai and, his house. But they still to this day don't know how much money Bill Wong has because they never asked or they never did research. They just knew that he had money and he was putting it into this particular stock. And that's where people go wrong. You need to ask questions. So, yeah, it's a great story, man. It is good to start this part. Oh, let me see here. Let me pull up the PowerPoint. And again, thank you guys for the super chats. Let me check the cash apps real quick. Okay, we good to go. We caught up. Yeah. All right, let me move this up. Let's see here. And this is just some basics. I want to start here first to familiarize you guys, for the beginners, on what we're looking at. So this is going to be a picture of a Charles Schwab symbol report, which is what you'll see on the website. Let me remove the Teach Hanley. Sorry, Teach. I got to teach a little bit. So I put this together for you guys. If you didn't know what the definitions were, once you open up one of those symbol reports and you're ready to trade, something like that. So at the top here, if you guys can see that, you have, let me make it a little wider. And I'll just scroll down. How about that? Hopefully you guys see that. So at the top here, I'm using Apple as an example. So you have the stock symbol. This is used to publicly trade shares on the stock market. Okay, so this is what you would type in if you're looking for a particular company. But some websites you could just type in the name and it'll pop up. But if you wanted the symbol, there it is. So this date, and it says post market right here. It's just simply the closing time of the stock market. So right here you have 5 p.m. Eastern Standard Time, so you're good to go. And then set alert. I want to show you guys that as well. Right there, you see this? Where my little pointer is right here? Right there. Okay. So set alert is just an automatic notification to inform investors of a change in holdings. And this is very important, especially for folks who are traders. They typically have alerts because if a stock is approaching a particular price point that they either want to buy or sell at, then they'll have that alert set to let them know, like, hey, you need to get on the market so you can go ahead and do your business. Who's a trader in the chat? Let me know. If you're a trader, you guys use this tool a lot, because if you're an investor, you tend not to even check as much, your portfolio throughout the day, throughout the week, throughout the month, especially if you have a lot invested in ETFs. Okay. So if you're a trader, you need those alerts set, and that's what makes that important. You set the alerts. Let's say you want to buy if a stock is currently at $5, right? And you want to buy it if it dips down to $3.50. You would set your alert to, let's say, $4. And then you would spend time opening up your website or whatever, company that you use, and you would just simply monitor. And once it hits $3.50, you sell. Does that make sense? It's very simple. And I know people kind of, complicate things, but yeah, it's very simple. So, okay. Let's continue. All right, where we okay, watch list is just a list of chosen companies that you're interested in buying in the future. So if you have some companies, like say you don't own Apple, you'll just put it in the watch list, and when you're ready to invest or you have enough money to do so, then you will go ahead and purchase it. Or you could just monitor a stock to see how it goes. A lot of people did that. What was it? Nvidia, whatever. And I'm gonna show you where I'm invested in with Nvidia, whatever y'all call it. But yeah, options chain right here provides a comprehensive view of options for a particular asset. Very simple, and I'm gonna go over that later on. Let's see here, and right here where it says today's range, it's simply the difference between the highest and the lowest price of the stock during the day. Okay. And then at the bottom, 52-week range. I mean, it's very simple. I mean, answered itself. 52 weeks, a year, the difference between the highest and the lowest price of a stock during the year. Now, why is that important to know this information, guys? Why is it important to know today's range? Because you can see how volatile the stock is actually is. So let's say that at the beginning of the day, Apple was trading at $211, but then somewhere in the middle of the day, it dropped down to like 150, which is, that's, crisis area, but it went down to 150. And then at the end of the day, it went all the way back up to 240. You'd be like, oh shit, this is a volatile stock. What is going on? So you need to start looking at the reports to see what happened. What did Apple do? Did they change leadership, change management? Did they sell some things? What happened? That's when you start to get curious. But when today's range is fairly stable, which Apple is considered a blue chip stock, so it's fairly stable, right? So you're not going to see any drastic changes. God, forbid for me. But yeah, you're not going to see a lot of changes like that. Now, over a 52-week range, that's your year report. So you could start from there. See how the stock is doing for the last year or whatever, right? And then you can start decreasing. What about the last 6 months? Oh, okay, cool. I see that the price was here. Now it's here. And then you start going down 3 months, 1 month, weekly reports. And you have the day, today's range reports. And that's how you kind of do your reconnaissance or your due diligence prior to investing in a particular stock. But I'm not telling you to invest in Apple. I'm just saying that it is a pretty stable, company. So if you were going to invest, this may be something that you will want to look into. Hopefully it makes sense. Okay. Let's see here. So let's continue. Now, at the bottom here, you have a simple stock chart, which is a snapshot of the company's highs and lows, as I was stating before. And you can change this. You see that right here? At the bottom, it says 1 day, 5 days, 1 month, and 1 year. And you could just click on it and it'll show you the line chart for that particular, time frame that you want to look at. Okay. So as you can see with the today's range, I think I got this. When did I get this? Was this Friday or Saturday? What's today? It's Friday. It started at 210.30. And then today's range, it ended 216 right there. And then look here at 52-week range over a year, it was 164. Then it's at 220. I had it set right here. You see that? That's pretty good. Okay. Pretty simple. Now let's go. Where do I want to start? Let's start with some videos because I think I'm talking too much. Y'all may be getting tired of my voice. Let me get the super chat. Jalon Jones with the 99-cent dollar super chat. Thank you, brother. Appreciate that. My guy coming through. Welcome. That's the first time I heard the name. That's a cool name. Is it Jalon? Jalon? Y'all, and I'm funny. Fun fact. You guys know that I support the JRLA Academy, which is Jalen Rose's school. In his book, he said that before people knew of the name Jalen, he was the only one in the world, I believe. And then moving forward, after people heard his name during the Fab Five and all this stuff, people started naming their daughters and sons Jalen. That's crazy, right? Spelled different ways, so on and so forth. But he was actually the first one that had Jalen Rose. First one. Fun fact. So read his book. Got to get the people what they want. It's one of my favorite books. So this is a shameless plug for y'all to read. I know people be mad at me for that, but you know me. Let me get this off here. So let's get into some of these Charles Schwab videos. If you guys don't know, on YouTube, they have their own channel, and they break down everything, and it just married correctly because we're going to be using a Charles Schwab account for my own. So they had their own videos, and I'm going to stop it here and there, but I want you guys to get the points from them, and then I'll, jump in with some of my notes that I did on my PowerPoint, okay? So let's continue. We'll go a little bit more in depth. Here we go. Fair use.
About investing is a lot like learning to ride a bike. At first, it may look intimidating or complicated. Dangers seem to be everywhere. That's why it's important to learn the basics and ways you can help minimize risk and protect yourself. After a good amount of practice and learning, you can take the training wheels off and really start riding. Along the way, the roads may change. There will be good days and bad days. And while learning to ride doesn't guarantee you a spot in the Tour de France, riding a bike could get you where you want to go a little faster. Let's start with the basics and look at one of the most common investments: stocks. A stock represents partial ownership of a company. When you purchase a stock, you're buying a piece or a share of a company. By owning a share, you own a small fraction of the company's assets and have a claim on its future earnings. There are two ways you can make money by investing in stock. The first is through stock appreciation, when a stock you own goes up in value. If an investor bought the stock at one price and the price went up, the investor could then make money by selling the stock to another investor at a higher price. The second way is through a dividend. This is a periodic payment issued by some stocks. A dividend is a way for a company to give a portion of its earnings to shareholders. Here's an example of how stocks work. Suppose there's a company.
All right, let me stop right there. I want to show you guys some examples of a dividend that I have in one of my daughter's accounts. Let me bring this up. And I'm also going to show you guys something and I think people take that owning part of the business thing for granted, because when you own a particular amount of stock, you get invited to sit onto certain things about that particular company. And you also get, the earnings reports, you get all this stuff. So you actually do earn a little bit of that company. Okay. So that's what that actually means. Hold on. Let me show you guys something real quick. Let me pull this up. Where is it? And I'm going to give y'all a little insight on some things that may change that was pushed by your boy Media Man. All right, so let's start here. Let me show you guys this real quick before we'll get back to the video, I promise you. But they just mentioned dividends, and I have to show you guys this to how they work. So this is from one of my daughter's accounts, right? So as you see here, this is from her E-Trade account for her securities. She just received a dividend or interest paid April 30th, 2024. You guys see that? Her dividend amount was $278.24. So to explain how dividends work, and you can either cash out or you can reinvest. I told we reinvest, of course, but basically what that means is when you earn a certain amount of money in particular stock or ETF, then they're going to pay you out for being a buyer or a part of their company. And it's a little, it may seem small, but once you start buying more shares, your dividends will go up. They will increase. So you get a percentage of every share that you actually own, and it's kind of a thank you from the company. Now, granted, sometimes companies may not be doing well, and they may need to lower, or you may not get a dividend for that particular month, year, quarter, whenever they release their dividends. I'm lucky with SPY, which is a S&P 500. They've been very consistent with their dividends, so she's been able to get paid and reinvest, so on and so forth, without any issues. So this is one of the tried and true companies that I believe in, in regards to investing. And I told you guys, with it Invita, I keep saying that wrong. They're actually in the S&P 500, so she owns a little bit of that, so on and so forth. Okay, so this is how dividends work. And when you start looking for a particular stock, this may be something that you should be interested in, because you would want to get paid for the stocks that you own. Everybody does. And some companies have higher percentages of dividends that they give out. Some have lower. You just have to do your due diligence to make sure that you're getting a good amount that can add up. And I keep telling you guys, just like I use the example of being sponsored by Clean Skin and also Teach Hanley, I showed you guys that, hey, we may be getting $6 commission, $9 commission here. But at the end of the month, when you add all those reversions or refreshings up, they come out to me for my account, they come out to about $150 to $200 ever since I've been sponsored by those companies. Okay. And I go right to the, to the market and I reinvest with that money alone. So every, different forms and streams of income, you got to figure out where that money is going to go. And I decided to reinvest it. So I just wanted to explain that portion of dividends to you guys. They are important. They will add up, because sometimes, in my fellow investors, they'll understand this as well. You will look into, you get an email and it'll say, you just got a dividend for 40 cents. And you'd be like, man, that ain't nothing. Okay, keep investing. And all that stuff will start to add up. Now, just imagine if you have a diversified portfolio and you have dividends coming from every company, they're going to add up. Some people have so many shares in different companies that they can actually live off dividends alone. Did you guys know that? Like, they make tens of thousands of dollars off the percentages or small percentages of dividends. And that's where you guys would want to be, where you can, I guess, use that as another form of income. Okay. So yeah, and that's what we're trying to get to. So then hopefully I can help you and teach you how to get there. Now, also, I want to point this out. I mentioned Fanbase a while ago. It is the social media app that was created by Isaac Hayes III. I invested in Fanbase back in 2020, I believe, when COVID was going on, C-19 was going on, and he had an appearance on The Breakfast Club. And I was like, oh, okay, cool. We got a black man that's trying to have his own social media app that's going to rival, like YouTube and Facebook and so on and so forth, Instagram. So I invested in it. And, that money has been sitting in there for a while. However, that does afford opportunities to where you get pushed up the line when you have any issues. And I'm going to show you guys how that works. Now, so my goal, before I read this, my goal was to start live streaming on Fanbase. And it just, came to me. I was like, man, why I'm not streaming on Fanbase, my live streams or whatever. But when I tried to do it, they don't have an account with StreamYard. So you cannot, you can't live stream to fan base, from YouTube to StreamYard, so on and so forth. So that's a problem, especially with me being an investor and also a user of their app. So what did I do? I became a male Karen. And I put in not a complaint, just in consideration. And I told them, I was like, hey, I have a platform. I have multiple platforms that have over 40, almost 40K subscribers, whatever, and I live stream damn near every week, 2-3 times a week. I would love to live stream on Fanbase, but I can't because you guys don't have a RTMP with StreamYard. So I'm pretty sure that they saw that I was an investor. So this is what they responded with. She said, hi, Medium Man WC. Thank you for getting in touch and taking the time to share your valuable feedback with us. Currently, we don't have RTMP. We have updated the status of your ticket as an enhancement/feature request, which will be reviewed by our leadership team for future consideration. We appreciate your support and your willingness to improve our community. If you have any further questions or feedback, please do not hesitate to open a new ticket. Best is Vicky. So yes. So in the future, if you guys see Fanbase with a link to StreamYard, I'm the guy. So I had to turn into a young Karen. But ultimately, it will definitely help their platform if I'm able to live stream on it. The only thing with investing in crowdfunding, and you can go to, if you guys don't know what Start Engine is, it's actually a website where they have all these different startup companies that you can invest in. So with crowdfunding, it is very volatile. And I just want to be clear with you guys, because you can invest in something and then the company go belly up. So don't expect your money back. So I invested into Fanbase knowing that could happen. But Fanbase is getting a lot of crowdfunding because, tapped in with the Black community, going on Breakfast Club. He was able to, I guess, get people to buy in just off of his involvement with the Breakfast Club on that huge platform. And go back to that 2020 show, they actually got him to his first $1 million, and I was actually included in that, $1 million donations or investments back, a while back. Okay. So yeah, but I just want to be clear. Crowdfunding is very volatile. I'm just putting it out there. Okay. I just wanted to share that with you guys. Hopefully that helps. Remember that. So let's get back to the videos. Here we go.
Called Bull Flag Cycling. This company makes bikes, really good bikes. The bikes are so good, in fact, the company wants to expand so it can sell more bikes to people all around the world. To do this, the company needs to raise money, also known as capital. There are a few ways this company could do this. It could take out a loan, but that would mean taking on a significant amount of debt. Or it could issue shares of stock. By issuing stock, which is called going public, the company can raise money without going into debt. Instead, it sells shares of ownership and a claim on future earnings to investors. So let's meet a typical investor. Our investor is someone who has a little extra cash. They're looking for an investment that has the potential to offer better returns than a savings account and are willing to accept the higher risks of investing in a stock.
You see that? And I'm going to stop it a little bit, but I'm just trying to remind you guys, risk. There is no reward without risk. Okay? And like I said, somebody has a little bit left over. I mentioned this before. Once you get to a point where you're, essentially financially stable, you can start investing in the stock market. I would not recommend that you do this if you have other bills and you have a lot of debt. Okay? Especially if it's high interest debt. Let's continue.
They think Bull Flag Cycling is a promising company that's likely to grow. Because of this, they think buying a share would be a good investment. So how much does a share cost? Suppose the company decides to raise $1 million and it decides to issue 1,000 shares of stock. Each share represents a fraction of the company's worth. Because the company is raising $1 million, at the initial public offering or IPO, each share would initially be valued at $1,000. Let's suppose the price doesn't change after the IPO. So our investor purchases a single share on the open market through their online stockbroker for $1,000. Now let's see what could happen to their investment. If the company does well and profits increase, the value of the company is likely to go up. As a result, the stock price may increase as well. Assuming the price of the stock goes up, our investor could now turn a profit by selling their shares to another investor in the stock market. However, if the company's ventures don't go as planned, its value could decrease, and so could the stock price.
All right, let's stop there. So, in the movies, when somebody is betting and they think they got cheated, they'll try and strong arm the person that they lost money to. You can't do that with the SEC. So if you put in a lot of money, like they just said, and it goes up, amazing, great. And if you decide to sell, you sell it at that higher price because you bought it at the lower price, then you're good. But what if that company goes down? And let's say you invested $1,000 and now it's at 500. Who are you going to strong arm? Nobody, because you knew the risk going in. Okay, so just keep that in mind. You can't yoke up, the stock market. So give me my money back. All right, let's continue.
If this happens, our investor could lose money if they decide to sell at the current price. When it comes to investing in the stock market, the basic goal is to buy when prices are low and sell when prices are high. But stocks in the stock market don't always go up. Sometimes they stay the same, and sometimes they go down. And sometimes prices change quickly. Because of this, stocks are considered riskier than other historically safer investments such as bonds or CDs. However, investors keep coming back to the stock market because with this increased risk comes the potential for greater returns. Savvy investors take precautions to try to minimize risk, like creating an investing plan, adding diversity to their portfolios by investing in a variety of companies, putting money in other investments besides stocks, and learning trading strategies for up, down, and sideways markets. Now you know some of the basics about investing in stocks.
Okay, so, and let me stop right there. And that was an amazing video, but I want to clarify for the people who may not know. And again, I'm not trying to insult anybody's intelligence, but we may have some people that don't understand some of these terms. So they mentioned CDs and bonds. And I made sure that I wanted to put a note in here to clarify. So a bond is just a fixed income instrument, right? So it's an investment product where individuals or people can lend money to the government or a company at a certain interest rate for amount of time. It's a specific amount of time. So the entity repays individuals with interest in addition to the original face value of the bond. So let's say that you bought a bond at $50 and over a period of time, it turns out to be worth $100. So you would get that back. Okay. So a stock represents fractional ownership of equity in an organization. It is different from a bond, which operates like a loan made by creditors to the company in return for periodic payments. Okay, so that's the difference. And also CDs, which are certificates of deposits, are bank deposits that pay a stated amount of interest for a specific period of time and promise to return your money on a specific date. They are federally insured and issued by banks and savings loan institutions. Because they are generally considered safe, CDs can be considered a considerable addition to the fixed income portion of an investment portfolio. So this is part of diversification, and it's it's insured, it's safe. One of the most safest things that you can invest in, those certificates of deposit. Do we have anybody that have CDs or bonds? Remember, like I said, when I first joined the military, they gave us the option to get bonds, and I signed up for it. And I remember I was getting they were sending like, it was like $50 or something like that. And I'll get these in the mail. But like I said, I was a broke airman back then. So I had to wait until they, matured into the $100, and I had to cash some shits in. So I didn't use bonds for a while, until I got a little bit older and I started to increase and save them. So yeah, so that's what I had to do because I was broke back then. So let me see. I'll get one. Sir said 100K in the CD is almost 5K year passive income. Yeah, my brother, he's far more savvy with CDs than me. That's one of his main go-tos. He actually just purchased a rental property in San Francisco or in San Antonio. So yeah, so he's very savvy on bonds, CDs, all that type of stuff. So and he gets paid a significant amount. So let's see here. Okay, let's continue with some of the videos.
But that's just the beginning. You can learn more with our investing education.
The investing world can be difficult for beginners because the lingo isn't always self-explanatory.
So this is just simply to familiarize you guys with specific terms that you may hear. And I got some more information up here as well once we get to line charts and so on and so forth. But for those who are new, this is going to give you a little bit of insight on what bullish and bearish means, different types of terminology that you may hear once you're on the stock market, okay? So pay attention if you're a newbie. Here we go, fair use.
And many terms overlap. Learning the lingo can help you communicate with others in finance and take better control of your investments. We'll briefly define a few common terms related to the market: investment types, portfolios, and trading. Let's start with terms associated with the market. The word market can be confusing because it can refer to investing in general or a specific index, like the S&P 500. A market simply means a place where buyers and sellers can get together to make transactions. This might be a physical place, such as the New York Stock Exchange, or an electronic gathering spot, like NASDAQ.
All right, so back in the day, they used to have to, in the stock market, you seen the pit on the movie Trading Places. That's how it used to be, but that shit is not required anymore because we can get on the phone and do all our trading, buying, selling, calls, puts, whatever, and options. You could do all that shit from your phone, which is amazing. Sometimes technology is amazing. And honestly, that's why I'm invested in the S&P, because it's a technology-driven ETF. And you know where the world is going, and that just works out perfectly. So let's continue.
People also refer to the market as being bullish or bearish. This refers to the direction the market is heading, up or down. An easy way to remember the market direction is to picture these animals in battle. A bull in battle drives his horns upward to gorge the attacker. So a bull market means that stocks or other investment prices are going up. A bear in battle swats his paws downward. So a bear market means that prices are trending down.
Bear, ladies, this is one time that you do not want to choose the bear. Okay? I'm just letting you know. You don't want to see the bear pop up on your investment screen, okay? Let's go for the bull, okay? Pause.
In addition to market terms, it's important to understand the different types of investments that can be made. There are 4 main types of investments, or asset classes, someone can invest in. These asset classes are equities, fixed income, derivatives, and cash. Let's define each. Equities typically refer to owning shares in a company. Some common equities are stocks, mutual funds, and exchange-traded funds. Stocks are shares of ownership in a company. This means you own a small piece of this company. Mutual funds are a pool of investment dollars that can often be professionally managed and may be invested across several different assets. In contrast to a stock, if you own one share in a mutual fund, you have a stake in many companies.
Y'all hear it? Hey, here we go. We getting into it. Mutual funds, ETFs.
Exchange traded funds are commonly called ETFs. An ETF has similar characteristics of a mutual fund, but most can be bought and sold through the trading day, similar to a stock, and typically has lower management fees. The next asset class is fixed income. This class includes assets like bonds, treasuries, and certificates of deposit. The name, fixed income, tells you a lot about the investment. Essentially, its payments are fixed, meaning they are consistent and delivered in regular intervals. The next
Let's stop right there. I want to show you guys something. Bam. Just mentioned ETFs, right? And you guys see I keep pointing towards S&P 500. This is where the bulk of my investments are in the S&P. I love it. How many companies you recognize? Some of your favorite companies are within the S&P 500. And of course, there are other mutual funds and ETFs that you can use. But I just love S&P because they have some of my favorite companies in there. Here we go. So look here. What do you guys see? You got Apple in here right there. We got, Microsoft, Walmart, Berkshire Hathaway, which is Warren Buffett's company, is in there. Look, my company, E-Trade. Look, Nvidia. I always get that wrong. That's in there. Google, Amazon. Hey, what else y'all want? You know what I'm saying? And I let me stop being biased and stop talking about S&P. I'll let y'all make y'all decisions for yourself, but I'm just gonna let you know that it has been good to me. So Netflix is in there. What else we got in there? Visa, American Express. So essentially, you guys see companies that I told you that when I first started, I was taught to buy into companies that I use. I looked around the house and I had to go see, okay, there's a product from Apple, right? There's a product from Microsoft. I use American Express, Netflix, so on and so forth. So that's how I chose my first stocks to invest in. And S&P was the easiest way to get into it. And you guys know that I like McDonald's for some odd reason. McDonald's is in there. And I also like a pair of Jordans or two. So if I want to buy some Jordans, if I wanted to, I could just go ahead and cash a little bit in and buy me some Jordans. You know what I'm saying? So that's why people always use that. Well, instead of paying $200 on them Jordans, brother, you need to go ahead and invest that into the market and make your money grow, with Nike. And then you can pay for them Jordans based off the stocks that you own. It may take a little bit, may take some time for those stocks to increase. But essentially, the message is correct. If you buy into Nike and you just watch the $200 grow, maybe next year, a year or two, you can be able to purchase those Jordans based off of what you earned. Okay. So no, I'm not trying to make it simple. Like you could just put $200 in a Nike stock, buy a share, and then the next day you're going to be able to, take whatever you earned and go buy Jordans. It don't work like that. But oh man, let me see. Oh, got a super chat, my bad. Blue Sox $5 super chat said, holding on for dear life, a term used to describe when a short-term trade becomes a long-term investment. Yeah. And like I said, I'm an investor, so I can wait it out. So, and then don't get twisted at some point. Let me just say this, because I know this gets lost in translation a lot. Yes, investing is good, but at some point, you're going to want to use some of that money that you didn't earn, and you want to liquidate some of them shares. And that's perfectly fine. Everything that I do on the stock market is not so my daughter, when she gets, older and I leave this earth, and she's just going to go burn through the money that I decided to, put into the stock market. I want to profit off of this something too. I want to, use that bread as well. So that could be an option as well. So yes, long-term invest, but when it's time to purchase something and you like, hey man, I can afford to take something out and use it towards this, whatever I'm trying to buy, then so be it. But you determine that. But don't let people think that you just saving to be saving, right? We get older. I'm about to be 45 next month. July is here. So yeah, so Yeah, you want to use that money. So just want to put that out there. Don't be a miser and just be saving. Oh, I gotta put I gotta put all my money into the market. Oh, $3,000, $4,000, $5,000. Here we go. No. Enjoy your bread, man. However you see fit. Here we go.
Asset class is derivatives. This class includes assets like options and futures. A derivative is a security with a price that is dependent on another asset. The derivative itself is a contract between at least two people. Derivatives commonly track other investments like a stock index. The movement in the underlying security is where the derivative derives its value. However, derivatives can be risky. They use leverage, which controls a large asset with a small amount of money, to potentially create larger returns or to help mitigate risk. But if the asset moves in the wrong direction, you could lose all of your investment.
Yep.
The final asset is cash. Cash refers to assets like savings and money market accounts. They're typically valued for two things. They're high liquidity and low risk. When an asset is highly liquid, it means you're able to access it easily or liquidate it.
All right. So, and I'm going to just give y'all a little bit of insight on an excuse that a lot of people like to say when they don't have money to repay you. They'll say something like, say you loan somebody some money, right? And it's time for them to pay up. Be like, oh, man, all my money is tied into my stocks. You know what I'm saying? It's nothing liquid right now. So I'm going to have to wait a little bit until, I cash this money in so I can pay you back. They lying. Anybody that's savvy about, the stock market and investing, damn well that you do not put all your money into the stock market. You need to have some liquid on hand at all times. Cash is still king, no matter what people say. I know we're trying to move towards electronic, but you always need cash. And the problem with having all your money into the stock market is because it's going to take a while to make it become liquid into cash that you can actually spend or lend, buy things with. So you never want to put all your assets into the stock market. You need to be able to get to that money, some money, whenever you need it, especially when you're trying to pay somebody back. So don't let nobody use that excuse, that, hey, it's all in the stock market. No, nobody's stupid enough to do that, okay? So I just wanted to put that out there. Up super chat, my bad. Jay Renard, what's going on with $5 super chat? He said, it's best to begin investing in things you're interested in. It makes it easy to do the research. Bought Nvidia in 2016 because I play video games. Yeah, man. Like I said, look around the house, see what you use. So yeah, people try and lie and shit. I ain't got the money. It's all tied up. Shut up. Give you my money. Here we go.
And while they won't grow as much as other assets, it can be important to maintain a portion of your assets in cash for a rainy day. When these asset classes are combined, they form a portfolio. Simply put, a portfolio contains all your investments, so you can see them as a whole. Other terms associated with a portfolio are allocation and diversification. They're sometimes used interchangeably, but they do have different meanings. Allocation refers to the percentage of your portfolio in each asset class. For example, an investor might allocate 50% of a portfolio to equities, 25% to fixed income, 10% to derivatives, and 15% to cash. The allocation may change over time based on your risk tolerance level and as you approach retirement. Diversification refers to having varied types of individual assets within an asset class. Let's say, for example, you want to diversify the equities portion of your portfolio. This means you may want to own many types of stocks, mutual funds, and ETFs in various sectors, such as healthcare, technology, and utilities. Allocation and diversification are important because they prevent you from placing all your eggs in one basket, so to speak.
Didn't I just say that? I'm glad they're driving the point home as well. Make sure that you always diversify. Let's continue.
And those are the basic terms related to investing. There are a lot of new terms to learn, and it can feel a bit overwhelming, but you're headed in the right direction. With these terms as a foundation, you may be able to participate more effectively in the market.
Hey, okay, and that's the most important thing. So hopefully those terms actually helped. And some of the nuggets that I give you guys throughout these videos, just make sure you remember them, because I was fortunate enough to not have to make these mistakes or go in blindly. Because again, and I give credit to one of my troops that I actually used to supervise. If you guys haven't heard this story, this is how I got into the stock market back in, I want to say 2014 going to 2015, stationed at the Pentagon. And I was just mentioning to one of my troops who was in the office with me, I said, yeah, my New Year's resolution is to get into the stock market and start investing. And he just popped out of his little cubicle and was like, oh, I could teach you. Not knowing that this guy has an economics degree from the University of Auburn. And I was like, really? It's like, yeah. And we opened up Investopedia, and he took time when we had breaks, and he would show me exactly what I needed to know about the stock market, right? So, and I'm saying this because sometimes in these spaces we overlook the impact that younger folks or people that you consider yourselves above, they have certain insight that you may not have. So always be open to learning something new, even if it's from somebody who's younger than you. And we got to stop doing that in these spaces, trying to dismiss the young folks. So I would not be here talking about this stuff and be in the financial position that I'm in today if it wasn't for one of my troops, and also for, having a finance young woman walking around here, so helping me out. So yeah, so I'm trying to help you guys not fall into the pitfalls that some people do. Okay, so let's go. Let's see here. Let me see. Let's continue. Oh, and let me say this. If you guys have any questions or want to put some insight, please make sure you put it in the super chat. Like I said, we're coming up on 40,000 subscribers. You guys have definitely helped me get to this point. So yeah, so make sure I see it. We got a lot of people in here. Y'all got a great insight. I will go back and I will look at a couple of them. Let me see here. Let me star a couple of them if I miss any. Okay, cool. But yeah, if you got some insight, please let me know. Okay, let's continue.
So you got a hot stock tip from a coworker, and they sound convincing. What should you do next? The short answer is, do your homework. As astute as your coworker may be, it's important to conduct due diligence on any investment before you put your hard-earned money at risk. Due diligence, or DD, is all about research, making sure you understand how a company operates so you can decide whether it's a good investment. There are many aspects to due diligence. One part could include fundamental analysis because it delves into a company's ability to make money. At its core, it's the process of analyzing a company's financial statements and studying other trends and data that can help you determine whether a stock is fairly valued, undervalued, or overvalued by the market. Fundamental analysis is a large discipline as well, but you don't have to do it all by yourself. You could determine how much you're going to do and what you want to leave to the experts. There are many parts to due diligence, and in this video, we'll discuss 4 core ones: earnings, capital structure, management, and expectations.
All right, so you guys see that I'm spending a lot of time here trying to lower risk as much as possible. I could have easily got up here, opened up FinViz, opened up the investment simulator, and we just could have started picking stocks, but that wouldn't have helped you guys in the future because we're playing with play money right now, on Investopedia. But I'm making sure that we start from the ground up so you guys understand fully. We already talked about the risk. Now we're talking about doing due diligence on a particular stock. And I'm actually going to show you guys something here, what due diligence actually looks like, so you can get in the habit of doing this yourselves. This is I use a familiar company for you guys just to make sure. So this is the Apple equity ratings report. You can, once you have an account with Charles Schwab, you can download these for yourselves, and it'll tell you everything that you need to know. So if you look here, strongly outperforming, this is from the 21st of 2024, June. Outperform ranking, percentile ranking 9. Look at this. You can see everything. Average price volatility, it's a medium. Market capitalization, my goodness, they raking the bread in. 300s of billions of dollars. Y'all see this? And it tell you the current price, growth rate, positive this week, last week. It tells you everything. So these are the reports, and there's multiple pages to this. I just grabbed one for you guys. So yes, so you can look at this stuff on your own to get a full, firm grasp on the company that you're about to invest in. Remember, you're buying some of the company. Okay? Cool? Just want to put that in there. This is all for you. You can do all your research for yourselves. So when we're talking about due diligence, this is a place where you can start. Okay? Let's see here. Let me open this up. Cool. Let's continue.
To get started, you need to know where to get the right information. Publicly traded companies are required by the Securities and Exchange Commission, or SEC, to report financial information to the public in quarterly reports called 10-Qs and annual reports known as 10-Ks. Despite the name, it's not a race, but instead a document filled with hundreds of pages of detailed financial information that can feel like a marathon to read. But there are tools to help you analyze them if you know where to begin. Some of the most important financial information for a business shows up in what's known as an income statement. There, you can see how much money or revenue is left over after accounting for a company's expenses like paying employees and utility bills. The end amount is known as net income, profit, or earnings, and is a crucial part of understanding a company's value. This is because the stock market is a place where people come to buy and sell future earnings of a company. A common rule of thumb is that earnings and revenues should be growing quarter over quarter and year over year. But there's more you can do with that information, like compare how fast earnings are growing or determine how successful a company is at making a profit. But that would mean a lot of number crunching. The crunching happens by taking data from these statements to calculate financial ratios. These ratios are standardized measurements that can help you analyze how well a company has performed and what its future might look like. Thankfully, the work has been done for you, and you can get many of these tools and ratios for free in a more palatable way from most brokerages, like on the Research tab on Schwab.com. One example of a ratio is net profit margin, which compares a company's revenue or the total sales before expenses to net income, the money it has left over after all the expenses are accounted for. Net profit margin is represented as a percentage, and a company with high margins is usually able to manage its expenses. This could mean it's good at turning a profit. Profit margins, like other ratios, are great for determining if a company's growing compared to previous quarters and years.
So let's stop right there. Do you guys think that will be important? A company that's able to cover their expenses, looking at the profit margins, it's important, right? Yeah. So keep that in mind. And sometimes, like as a beginner, you need to be aware of these things, because I know it could be as simple as, let's say you go on the stock market and you see a line chart and it's shooting up. You're like, okay, that's a good stock, but you don't know if they just hit a good streak, a bad streak, whatever. So you got to do your research, profit margins, so on and so forth, just to see where they were, let's say a month ago or a year ago, 3 months ago, whatever. So, I mean, it can be simple at times, but I would still do a little bit of research so you can lower risk. Let's continue.
They're also good for comparing the company to its peers. Many investors identify top-tier companies by comparing ratios within an industry group. You can use the price-to-earnings ratio to see how much you're paying for a company's earnings and whether the stock is over or undervalued. It compares the price of a share of a company's stock to the company's earnings per share. If a stock is trading at $20 and its earnings per share are $1, then the stock has a PE ratio of 20. Some investors like to focus on companies with a lower ratio, believing it's a better value. Of course, there's other ways to examine revenue and earnings, but another core area of due diligence is a company's capital structure. It deals with how the business is funded. Funding is done in a few ways, including selling equity by issuing stock shares or borrowing money in the form of things like bonds, mortgages, and other debt. If a company borrows money or incurs debt to make new products or otherwise expand, it can affect earnings. Debts have to be repaid, so they're essentially a claim on a company's future earnings. A company.
Somebody mentioned bankruptcy. Ghost Beard. Stock last to be paid in bankruptcy. Bond paid before a stockholder. Cash, you ain't in this mess. Cash is king. Good on you, Ghost Beard. Let's see here. Sir says you can make some nice profits on undervalued stocks. Pharmaceuticals are a good place to find them. Yeah, you know what? If you get lucky, you know, and you could find one of those undervalued stocks and they just shoot through the roof, it can happen. Yeah, so let me see here. We're gonna finish this video and then I'm gonna open up FinViz for you guys so we can break up the monotony, so to speak. Here we go. Fair use.
With a good capital structure generally keeps its debt and other liabilities in check, while growing equity by retaining earnings that can be reinvested into the company. The debt to equity ratio is a good way to analyze how burdened a company might be by debt. A high ratio that is also higher than the company's peers could be a sign that the company has too much debt, which could be a drag on future earnings.
Hey, is it ever a good thing to be in cahoots with a company that has too much debt? Hell, you don't even want to be involved with yourself if you got too much debt. So that could be something you look for when you're trying to choose a particular company to buy into. Okay, too much debt, that can be a problem in the future. Just saying, it's not advice; it's just education. I'm trying to toe the line a little bit, but yeah. So let me see here. Sir, find out super just said great info. You're helping people out. Thank you, man. Try to do my best, and I know some of the stuff may be somewhat boring, but I mean it's necessary. I wouldn't feel right if I didn't do this the right way. So let's continue. Thank you, brother. Here we go.
However, debt levels vary from industry to industry, so peer comparisons are an important part of this analysis. I've talked about analyzing the books, but what about the people keeping the books? Management effectiveness analysis focuses on the ability of the management team to run the company, and it's one of the few soft data points that can be helpful when researching an investment. Successful management can seem abstract, but there's actually another ratio that can help grade how well management does at turning shareholder money into profits.
So, and I'm sorry to stop it here again, but I want to give you guys an example. You remember Steve Jobs, right? Apple. I know a lot of people said that he was just somewhat of a figurehead at the, the later part of his career, but the reason why Apple was able to do so well is because people actually liked him. And I know you may hear some, I guess conflicting arguments. Well, we didn't like him because of this, and the Apple iPhone stayed the same. Brother, it's people every year, and I used to be one of them, that every time a new iPhone came out, I was the one upgrading. And that was because I believed in the company. I was invested in it, so I used to do the same thing. But people like Steve Jobs, and that actually says a lot about a company. You can go far if somebody, likes you. And that's why, the Twitter/X, when it went over to Elon Musk, it kind of did poorly when they first did the switch or whatever. I don't know if you guys remember that, but it's a lot of people that like Elon Musk, and there's a lot of people that don't. But if I had to compare the two, Steve Jobs, God rest his soul, and him and Elon Musk, more people like Steve Jobs than they did Elon Musk. Does that make sense? Hopefully, trying to put that together. It's the same thing as what's another, Dan Bilzerian is, right? Dudes like him, you know what I'm saying? But most dudes like him. Married dudes hate him. Women don't like him because he's able to live a certain life that encourages men to just, use women and travel or whatever, which they don't like in society. So it's kind of the same thing. So, okay, I just wanted to make sure that made sense, because I know we get some conflicting views, but people like Steve Jobs. They used to like him. So, look here, Caesar. Sir said, I don't like Elon, but I would trade the issue. Yeah, and like I said, it's just the personality matters from a company. And on a lower level, man, should I even talk about? I'm going to say this. Management and customer service matters. Okay, Black community. And I know that sometimes our Black businesses, we feel entitled to Black money. So that means that you could just act however the hell you want. What's your order? What you want? Why you taking so long? And you know what I'm saying? Like, we take that for granted. So the companies that tend to do well, such as like a Chick-fil-A, they spend a lot of time on, sanitation, making sure everything is clean, and the customer service. That's why they're able to do so well. And I think that if you own a brick and mortar business as a Black person and your customer service is shitty, then that's probably why you're not doing as well as you should be. And I think we need to invest in more customer service aspects in the Black community than anything. The food is good. You know what I'm saying? Because people going to come back because they like a nice fish plate. You know what I'm saying? So, but damn, man, if you could just, the cleanliness and the customer service does matter. And it happens with wait services as well. Like in restaurants. I've heard too many people, Black people in particular, saying that I don't like going to restaurants if my server is going to be a Black person. And that comes from, the customer service aspect. And I'm not trying to stereotype us. I just hear this narrative too many times. So when people like the leadership and the workers, your company will do well. Okay? Just a nugget out there for the Black folks. Invest in customer service. It probably won't cost you much unless you, invite some professional in there to teach you, but it should be a mainstay. Okay? So I'm just trying to help y'all out. So let's continue.
It's called the return on equity ratio. And in this case, the higher the ratio, the better. It's calculated by dividing the company's net income by the average shareholder's equity. If a company has a higher number than its peers, investors might perceive that the managers are good at making money. It's not all about the numbers, though. You can also find commentary directly from a company's management team on the company's investor relations website, in the 10Qs, 10Ks, and through analyst reports. Those statements can provide insights into what's on the minds of the people in charge, such as product promotions, growth expectations, or even potential dividends. Companies are also required to disclose any present risks they face, which may be an important factor in your investment decision. Risks can include lawsuits that could affect future earnings, or other trouble like concerns that the company will struggle to market to certain customers. That's a good reminder about the importance of diversifying the types of stocks you invest in. Investing in companies from several sectors and industry groups that don't usually rise or fall at the same time can help manage risk. While earnings growth, capital structure, and management are all important parts of conducting due diligence, much of what's being analyzed is in the past. Investors are most often concerned with the future prospects of a company. This is where the expertise of Wall Street analysts is helpful. Banks and research firms around the world pay analysts to study many public companies. They publish frequent reports about their views, including what are known as forward earnings estimates that forecast what they think each company will earn for the upcoming quarter or year. They're educated guesses, but heavily researched ones that analysts make using their professional projections and models. Larger companies tend to attract more analysts, and the reports can be found through most brokerages, including Schwab. Analyst estimates tend to be pretty big news when companies report earnings every 3 months.
Y'all recognize this this little report right there? Didn't I just show y'all that? Oh, just let you know, little nugget. Let's continue.
A company beating or falling short of estimates often result in big jumps or drops in the stock price. However, Outside of earnings announcements, positive adjustments to an analyst's estimates can be an indication the company may be doing better than expected. Negative estimate adjustments could be a bad sign for the company. Analyst estimates for the future growth of earnings can help investors calculate the intrinsic value or fair market value of a company. Anyone can calculate intrinsic value, but it's complicated. One method requires you to calculate earnings estimates for a company over a period of, say, 5 or 10 years, then discount those estimates based on how likely it is to happen. Not only is the discounted future cash flows model complex, but it requires a few educated assumptions, so having analysts to rely on can be a big relief. However, if you're relying on someone else, even an analyst, make sure you understand their assumptions because they may have a different economic outlook, investing time frame, or bias on the industry than you. While a hot stock tip is exciting, without doing some due diligence, you could get burned. When you know what you're looking for and where to find it, it's a lot less overwhelming. Remember, the goal of due diligence isn't to make sure you know everything about a company. Instead, it's to help you evaluate the pros and cons so you can decide whether it belongs in your portfolio.
All right. And that was a great way to end. I love it that they're trying to push being safe, knowing more. Like I tell you guys on my channel all the time, do your research. Don't take my word for it. Do the research yourself. Read a little bit, understand the companies that you're investing in, even tried and true companies such as Apple, Microsoft, Amazon, Tesla, so on and so forth. Just get involved. And sometimes you get the emails, once you start investing a significant amount in a particular company, you'll get invited to different, seminars, conferences for free. They'll send you stuff. They're just so happy that you're invested in their company and you've been there for a period of time. So so it is definitely something that you would want to get into. But like I said, to break up the monotony, let's start picking some companies out since we know a little bit. We did our due diligence. Let's open up FinViz. So this is what I use to look at all of my maps for my investing. And you can see, as you guys can see right here, this is a ticker. Of course, the market is closed right now. However, you can still see this stuff if you have a FinViz account right here. So let's open a map up. Man, you guys see this? So we're looking at the S&P. So these are the companies, all the companies, the 500 top companies that are in the S&P. And I know this may look a little bit, like all over the place, but it's very simple. So all you got to do, let's take how'd y'all say it? Nvidia. I've never paid attention as I invested in this. But so you hover over that and it'll tell you the exact price that it's currently trading at. You guys see that? And these are all the companies that are within those semiconductors. You guys see that? Here, what did it say? NVIDIA. Okay. NVIDIA. Okay, there we go. So I'm going to click on this. Thank you. And it'll just pop it out. And you can actually see, and I have mine set at candlestick chart right here. So this, right, what you guys are looking at here, let me open this up. All right. So what you guys are looking at here, this is I want to say the daily report. And you can see where it's trading right here. Let me go to monthly. What the hell? I hate these ads. Where my tech folks at? Y'all so tell me how to get rid of this foolery. So, all right. So it'll go right. Hold on. Jesus. Right here. Let me see here. I'll take that. And it'll show you. All you got to do is scroll down here. I'm not pushing anything. How the company has risen to success. That's why you hear a lot of people talking about it. And since we have the candle charts open, let's do this. before we go into it even further, I got some for y'all since we got candlesticks out. Let me see. Where's my little cheat sheet? Is it on my PowerPoint? Hold on one second, guys. Yeah. I know you guys seen the candlestick chart, and we're going to go over this. It's going to be in the Charles Schwab video, but since we're here, I might as well show you guys right now. So this is what and I like using candlestick. You have to be very savvy to use these different types of things. Like they have so many different ways of describing what a candlestick looks like. So it's very simple. So the rear body right here, the close and open, green is good, red is bad, of course. So this is what you saw with the line chart, the candlestick line chart. Bullish, green, bearish, bad, right? And of course, if you do options, you can trade in a bullish market. You can put some puts down and you can bank on a stock going lower. But this is the basic I guess, construction of a candlestick chart. We're going to go in a little bit farther. As you guys can see here, I got everything set up for you guys. Cup with candle, candlestick. I got everything set up. So it's just in a candlestick chart. The opening and closing prices of or a period are represented by the body of each candle. So that's basically what it is. And I got my Forbes advisor out here just to let you guys know. Okay. You see that? Right there. We're going to go over it further. I'm going to wait till the video pops up. So let's go back. Let's see here. Bam. This is good. I'm going to actually highlight this one. Okay. Sir, bearish means they are selling, not necessarily bad. People just taking profits. So the easiest way, and you are correct. Let me not say that. You are absolutely correct. And I may not be clarifying that, and I should. But when people see red, they associate that with bad. When they see green, that's good. So if you're trading, if you're trying to purchase some options, a call is you betting that the price will go up, which would be bearish or bullish, right? If you're betting on a put in options, that will be bearish. So that's why I keep saying good and bad. But you are absolutely right. People are selling more than they're buying. But when you sell more, then that means what? The price will eventually go what? Go down. Okay? So yeah, so you're right. Let's see here. Okay, let's bring this up. Thank you for that. All right, so since we got this open, let me go back so you guys can see that once again. Oh, I think it's already up. My bad. I get that out of here. But yeah, so that's basically what a map is. Don't let this be intimidating to you, but it's just the easiest way that you could see everything moving at the exact same time. Okay, so that helps especially if you're a day trader. Remember, investors and traders. If you're a day trader, I've seen people have like 3 screens with FinViz maps up, because you can actually the red again associated with selling, price goes down. Green, good. Okay, price is going up. So people want to see these colors so they can know what the hell is going on. And the company that's the largest in a particular group, such as I'm not even going to say it, NVDA, semiconductors, technology, Microsoft is the highest in there, consumer electronics, Apple. See that? So you can see all this stuff. It's pretty simple. You can see everything. And all you got to do is run your mouse over it and you can see exactly what you need to see. Okay. Here you go. Cool. I'm just trying to, trying to take the the scarcity out of it or whatever, or people being scared of getting a FinViz account. It definitely helps. So let's go to this Investopedia portfolio here. I'll let y'all pick some while we go through these videos. So as you can see here, I don't have any stock holdings yet. And like I said, guys, this is going to reflect on y'all. Let me show you something real quick. Y'all see that? Right there at the bottom. That is our current rank. Let me move myself. Look at that. Game info, current rank. We are, goodness gracious, man. We are in the 1 million. So I'm gonna just say that much. So 1,007,893. That's us. So we need to increase. So let's see if we can improve. And I'm gonna actually screenshot this once I get done here so we can know where we started. And we will check this every live stream to see where we're going. Let me look back out of this. How did I do that? All right, cool. So let's go here. Somebody said, "What are we watching? What do y'all see? Y'all don't see the Investopedia simulator? Ghostbeard, you don't see the Investopedia simulator? Let me know. Is something wrong with the stream? We good? We good? Okay. Sir said, yes, we do. Okay, cool. So let me go to y'all. So now that you know a little bit about due diligence, being safe, or whatever, I want the chat to let me know. What will be our first investment? Our first purchase and within a company. What company would you buy first? Nope. I'll put it in. Let me know. Company name. What are we getting first? Somebody said NVDI. I keep messing that shit up. SPX. Put the name out, not the symbol. Let me know. Let me know. Let me know. Everybody needs copper. So let me ask y'all a question about NVDIA. Have they been a tried and true company for years and stuff, for a while now? I mean, I'm just asking because I know we've hit it's been great for my S&P. I understand that. But is this something where you would probably want to put the bulk of your money into? Let me know. And I'm just asking questions. I'm just being, playing devil's advocate here. Because again, we have $100,000 to manage. But like I said, most people tend to invest about 15 to 20% of their annual income after taxes. So we're only going to invest about $20,000. Maybe I may bump that to $25,000. I may do $25,000. We'll see. Somebody said I would drop $20K on. I'm gonna just say NVIDIA. All right, so let's see. I keep saying NVIDIA, but 20,000. That's a lot. That is a lot. Let's see here. Woquill said they've been the king of graphics cards for years. The crypto boom and now AI training with their GPU is the new reason for success. Okay. So y'all willing to put, so we're going to put 20K in NVIDIA and we're going to have 5,000 left over. Are y'all willing to do that? Where the super chats at, man? What the hell? Who's going to be the deciding factor? What the hell's going on? Hold on. Let me see. I'll be missing cash apps and shit. Oh, we good. What we doing? Demetrius James said, I wish I had been able to invest more in there. Yeah, man. It's what is that? FOMO, fear of missing out, and all that type of stuff. We know the game. Sir said if our budget is only 25K, then drop 5 to 8K. Okay. What y'all think? I'll give it some times before we get back to the video. Let's see here. That's where we're at right now. Somebody said Microsoft. Okay. Quad Life. What's going on? So this is what it's looking like. It seems like people know a lot about this. I mean, hey, the gentleman, this will be me. You know me. You know, ETFs is my thing. But since y'all say, let's see here, sir. $5 super chat said if our budget is 25K, then 5 to 8K on Nvidia. Sorry. We can go with the Apples and Teslas after. Okay. So let's start there. So if we're buying, how much is that? So let's say 8K at the top. I'm in, brother. Don't. I'm gonna keep messing it up, bro. Nvidia. I'm gonna keep messing. I'm sorry. I'm trying my best, Jay Renard. Let's see here. Let's see. 123. 54. Say times. What is that, about 80? Let's do 75. 123, 54 times 75. That's 9. Let's go down to 65. 54 times 65. Okay, that's right there. That's good enough. That's good enough. Oh, thank you. Woke Quill said, "What do you think about REITs?" It just takes a long time to gain money. You're talking about investing in the real estate with what is it? What's the guy's name? Graham. What is it? Whatever it is. He's big on REITs out there, but it just takes a while to get any money back, to see any money. I looked into that maybe in 2018, 19, but I just didn't like how it worked. But I mean, it can be profitable from what I heard. So let's see here. AJ Ware 49 super chat said, honestly, many men haven't been paying too much attention because I'm at this buffet with the fam, but nothing but love and respect from the shy, my brother. Oh man, you good, brother. Thank you, AJ. Appreciate the support. So let's go here. 65. Let's preview the order. So right here, you guys see that? So that's about $8,030.10. This portfolio. It should be. It's gonna take. It'll open. I don't know if they're doing it now, but once you see here pending trades, when the market opens, then it'll go ahead and purchase. But we can go ahead and send those trades in now. And Project Leroy said, "Oh, okay." He said, "LVMH, Louis." The super chats have it. Let's take a look. Y'all agree? Oops. Did I get that wrong? Why the hell's not popping up? They must be limited. We may not be good. Nope. Sorry about that, Project Leroy. We can't do it. Damn. So I said, Project, there's a 304's love by LVMH. The sir said, Medium Man, I bet you a six pack that NVIDIA crushes it. Now, I know it's a good. Like I said, I'm leaving this up to y'all. So we got our order in. Let's do one more while we're here before we get back to the videos. We already got where is it? Right here. So we got 65 on deck. Jamal Obama. Let's check that out. Black. BlackRock. Jamal Obama. Let's see how the company is doing. So that's a 1 day. Let's do it over a year. All right. So for a year, it started, and on 28th June 2023, it was trading at 688.21. And then the lowest point was that July, August, September, October, November. 5 months later, it was at 598. So essentially, like if I was looking at this to vet this for something that I was going to purchase, I would see what the difference is. I would mark this right here, the start of the year, the lowest point, and then I'll actually go to the highest point, which would be 817.89. So November, December, January, February, March. So that's about a 4-month turnaround, and it actually increased rather high. And it's been fairly stable at that rate to where now it's at 787.32. So that's actually a pretty good chart outside of us finding out why did this stock increase or decrease like it did in a 5-month time frame. So don't y'all think that would be important to understand, right? So if you seen this line chart, let's say that you're a new person and you looked at this and you're like, oh shit, it's doing pretty well right now, but for some reason in November of last year, what happened? So you'd have to do some research to see why the stock decreased so much within what is that, 5 months from 688 to 598. Okay. But then it started to stabilize up here, which is good. Let's open it up a little more. Right there. So that seems to be their sweet spot. For my traders, day traders, this will be important to you. Not this far out because you guys tend to use the current market and you monitor it. But if this is how it looked, then you would probably pin and say about 550 to, I'd say, $814, $800, $550 to $800 is their sweet spot that they've been operating in for the past 2 years now. So that's pretty good. I don't know what happened. I would want to know why it increased. That's an amazing slope. Look at that. That's crazy. Man. That is crazy. Somebody says T713. Most REITs pay out monthly, but how long does it take to pay out monthly? That's what I'm talking about. So if you invest in it, how long does it take to get to that point? So I mean, that's whoever asked about REITs or whatever. I know I still have some information on it somewhere. Where'd it go? I would have to go. Oh wait, shit. Yeah, Grant Cardone. That was his name, Grant Cardone. I still got the emails in here when I was looking, and that's is asking me to schedule a call. All right. I'm about to do some more research on the REITs. I just stop. But there we go. Okay, so let's see here. Earnings. Oh, the upcoming earnings report, July 19th. Let's see here. 52-week high, 845. Oh, I'm acting like I'm doing this myself. I forgot that y'all here. My bad. Oh man. It should be fun. So, okay. And it actually closed out pretty good. $6, you know what I'm saying? In the positive, that's pretty good. Let's see here. 119 billion market capital. Okay, it's a pretty big company. Like I said, this is my first time really looking at this. 52-week high, 845. The day's low, well, that's not bad. 781. Like I said, that sweet spot between $550 and $800. So it's right there. That 52-week low is 596. Like I said, I would still want to know more about this. If I was, reviewing this. Let's go to the day. See how volatile. Yeah, it's pretty stable. So, this is a good chance to let's see here. To educate for my day traders. So if a day trader saw this during the day, depending on what their objectives were, this little spike right here between 9 a.m. and 10 a.m., that could actually be a good spot for a day trader. And the reason why is because most day traders, they tend to be most active once the market opens and before, like, I want to say lunchtime, 12 o'clock. So if you had that at 9 and 10 a.m. and somebody was actually monitoring this and they saw this, a little bit of, went up high and then it started to stabilize a little bit, they could potentially be in the money at that 792, which is a good thing. It depends on the objectives or the goals. I'm not a day trader like that, so I know there is a couple people that do that. So you guys can let them know in the comment section today that may be good during that time period between 9 a.m. and 10 a.m. Because most day traders, they're not as busy at the end of the day as they are at the beginning once the market opens, immediately opens. So that'll be cool. Let's see here. So BlackRock, what is the company? I don't even know what this is. Let's get I need some info. I need info. All right. So this is BlackRock. I hooked y'all up. See, sector finance, investment managers. BlackRock Inc. provides investment management, risk management, and advisory services for institutional and retail clients worldwide. Its products include single and multi-asset class portfolios, investing in equities, fixed incomes, alternatives, and money market instruments. The company was founded by Susan L. Wagner, Robert Stephen Capito, and Lawrence Douglas Fink in 1988, and is headquartered in New York, New York. So investment management, risk management, if I was to put my stamp on it, I would say that they would probably never be out of a job because the stock market will always be going and people will always request the services of people who provide risk management. Does that make sense? So you can kind of pseudo justify a reason for buying it just based off of that fact alone. Like, okay, well, they're involved in the stock market. They educate. That makes sense? I don't know. Y'all may have another way. It's so many tips and tools that you can use, but that could be one of them, right? It's a needed career field, if I would say that much. Okay. Let's see here. Capitalization, enterprise. Oh, I'm sitting there looking at it like it's just me. So look, number of employees. This is a worldwide company. Oh man, they almost got 20,000 employees. Okay. Number of shareholders, 197. Let's see. I'm looking. Is this a dividend? They pay okay, and they got dividends. Dividends per share, 20. During the fiscal year, they paid almost. Well, they paid $3 billion in dividends. Oh wow. Okay. Okay. And last year revenue was about 18.6 billion. Free cash flow 3.9 billion. That's pretty good. Starting to this company sounds familiar. I don't know. I know they is the same Black Rock that's with like Vanguard or something like that. If so, then yeah, this is a pretty good company. Because I remember seeing this on like a real estate, BlackRock real estate. It comes out on my valuation. So if this is the same BlackRock, let me see my home valuation. These things. Once I get to talking about it, I get reminded. Hold on. Where's hold on. There we go. Hey, let me know in the chat if they got something to do with real estate, because I see them all the time on my consumer services real estate market update for my houses. They always give me the BlackRock. I think that's what it is. Come on up. All right, here we go. Valuation, market insight. Black Knight. No, it's Black Knight. Oh, there goes BlackRock. Okay, so yeah, I was right. So I was right. Okay, y'all putting it in there. I wasn't looking at the chat. Ghost Beer will buy your house for cash. Okay, cool. T713 say yes, that's them. They're basically a private equity firm slash hedge fund. Yeah, that's them. I'm looking at it right now. Sir said BlackRock, Vanguard, and State Street on the. Yeah, okay. I'm on the right track. It's crazy how shit be in your head and you remember it once you start talking. So good on y'all. Y'all knew. I didn't know off the top of my head. So let's see here. But it is on my valuation report. I get all those here. And then Maryland. Okay, cool. We worked through it. So are we purchasing BlackRock? Let's get this out of here. We getting a little bit of this. How much we putting in to BlackRock? Let me know. Who brought this up? Who was that? Who brought BlackRock up? I had to go back. I forgot. Jamal Obama. Are we getting a little bit or what? What we doing? BTI has the same chart pattern as Black, but it. Nope, I guess not. Okay, so let's get back to some of these videos. We'll come back to it here in a second. Let's see here. Let me get rid of this. So we already got our first purchase in. Let's get back to the videos. And this one, I think this one we're talking about the stock charts. And for anybody that's aspiring to be traders, this may be very beneficial to you guys. Okay, here we go.
If you've ever watched financial news or looked up the price of a stock, chances are you've read a stock chart. A stock chart is a graph that displays the price of an investment over a period of time. In this video, we'll discuss some chart basics, view 3 common types, and show you how each displays an investment's performance. Finally, we'll introduce a few basics of technical analysis, which is an investment strategy that analyzes charts to help forecast future price movements. Let's start with charts. The main purpose of any chart is to display the current price of an investment and how its price has changed over time. One of the most common chart types is a line chart. A line chart is fairly simple. Time is represented along the horizontal axis. This time frame can be adjusted to show any period you want, from minutes to days to years. And price is represented along the vertical axis. Points are added to the chart to display the investment's price at the end of a trading period. On a daily chart, this would be the closing price at the end of a trading day. On an hourly chart, this would be the price at the end of the hour, and so on. The points are then connected with a line, which provides an easy way to visualize price changes.
All right, so it's the simplest way to look at the market with the line chart. And like I said, we get into candlesticks and so on and so forth. But this is from my PowerPoint that I put together for you guys. So this is just simply what it is. It's very simple. It's not too much. But again, like they stated before, the stock chart's y-axis tracks prices and its x-axis tracks time periods from minutes and hours to months and years. By analyzing how a stock's price has changed over time, investors can identify trends and patterns that inform their strategy. And again, like I said, this is very important for people who are traders or aspiring to be a trader. Okay. And that's your line chart. Let's get back to the video.
Then another chart may be displayed just below the line chart. This chart displays the security's volume, which is the total number of shares bought and sold during each time interval. Volume is a way to measure trading activity. The higher the volume, the more buying and selling there was during that time period. Finally, let's examine the information covered at the top of the chart. This section includes the company name, the stock exchange on which the security is traded, and the current date. This area also provides additional details on price, such as the time period's opening and high prices. The amount of information detailed at the top of the chart will vary depending on the chart provider. Here's some information you might find on a daily chart. The opening price is usually labeled open, or it might be abbreviated as O. This is the stock's price at the market's open. The highest price the security reached is labeled high, or H. The lowest price the security traded at is labeled low, or L. The difference between the high and the low is range, which is labeled range, or R. The security's closing price is labeled close, or C. The closing price is typically the value shown in the line graph. Then we have volume, or V. This calculates how many shares or contracts were traded. Finally, we have change. This shows both the dollar amount and percentage change from yesterday's closing price to today's closing price.
Now, these things, I'm glad they're pointing everything out, but this is something that you're going to have to get familiar with if you're new to this. So yes, I'm glad that you can come back to this live stream and you can get the information here. But again, I'm giving credit to Charles Schwab for actually identifying these different, what this means and what that means, so on and so forth. But for beginners, main things that you need to know is, the company's name, of course, where it's being traded, and also looking at the line chart. So you can see, how well or how poorly your stock that you're about to purchase is doing. But you would want some, technical information. You come back to this and you can find it here. Okay, let's continue. Fair use.
You can also view all this information, like the opening and closing prices, on a bar chart. This chart uses a vertical bar instead of a line to represent price. This bar provides additional details about price movement during a single trading period. The left tick is the opening price. The right tick is the closing price. The top of the bar is the highest price traded. The bottom is the lowest. Some investors might prefer a bar chart over a line chart because they believe it better reflects market sentiment and the price action of a security. In other words, you can see if other investors are bullish or bearish on a stock. You can also see this information on a candlestick chart.
Hey.
Candlestick charts feature the same components of a bar chart, like the opening price, closing price, and the day's high and low. The lines above and below the body of the candlestick can be referred to as wicks. If a security closes higher than it opened, the candlestick is empty or white.
Closes higher than open.
But if the security closes at a lower price than it opened, the candlestick is filled or black.
So if we had to put a good or a bad on this candlestick picture, which one would be the good and which one would be the bad based off of what you're expecting? So let's say that you bought a stock low, 150. So would it be a good, I guess, marker if your candlestick was opened or was it closed and you're expecting the product to go up? Open or close? What's a good, I guess, marker for you to see just off the top of your head? If you opened up and you had candlestick set and you see all of them open, is that good or bad? Empty. Okay, cool. Y'all know. And again, y'all are I know we have some experts in here, but remember, understand, we trying to teach as much as possible. Okay. Open. Okay. All right. So let's continue. But things can change once you start, trading options. If you put in some puts and you see close and then everything is trending down, you might be like, hey, I like that. And it's always been something wrong with my brain when I trade options. It's tough for me to bet on a price to go down, and I don't know if any other options traders have ever thought like that. Like, damn, man, I'm really, put my money on this going down. But I mean, I know people that's all they do trade is they bank on a company going down. So it's a strategy that some people have. So let's continue. Here we go. Oh, and go back. Remember when I showed you guys this? So this is from the PowerPoint. It's just explaining the same thing that they were saying. Okay. Let's continue.
Use of color helps investors quickly identify the security's performance. Some investors might use a candlestick chart instead of a bar chart because they think it's easier to identify market sentiment and patterns. These patterns attempt to predict how the market will move in the future. For example, one particular candle shape may forecast that the market is due for an upswing. This is just one example of technical analysis. There are a variety of techniques that can be used to closely analyze trends, price patterns, and volume movements.
So did you guys see that long wick? Pause. So they said that this may be an indication that the market is about to have an upswing or that company. That's what a day trader would look for. They would see that large wick, the long wick, and they may bank that, hey, we may have an upswing. But sometimes they're wrong. But these guys are professionals with it. You can watch them do it live on YouTube and also on TikTok. There are some people who are day traders and they'll open up, not all their strategy, I'm pretty sure, but you can watch them do it. It takes a lot of skill to day trade, to be good at it. And I think, what did they say? Like day traders, I think it's only like 10% that can make it a career and like get paid steadily from the market just off doing day trading. It may even be less than that. So, I mean, you guys let me know, because I hear people say, I day trade. They never say day trading is my career. I do a little bit of day trading. So, and this is a tip for the ladies. If you meet a guy who says his job is a day trader, remember, it's only a small percentage of guys, or ladies and gentlemen, who can consider that an actual career. Like, you can literally stop working and just rely on your day trading skills to earn profit. Small percentage. Okay? So ladies, don't get bamboozled. Yeah, I day trade. I mean, you guys can let me know if I'm lying on that, but I remember researching, I think it was in my book, it's a small percentage of people who are successful at day trading. So let's continue.
All three chart types are widely used. Generally, the type an investor uses is often a matter of preference. Next time you pull up a chart, try using a different chart type and see which you prefer.
Very simple. So let's do some, let's do a test real quick. I downloaded a couple of things. What was that we used to say on Mortal Kombat? Test your might. All right. So let's take a look here. Which type of stock chart is this? Can y'all see that? What are we looking at here? What is this? Since we just went over the video, what type of stock chart is that? Beginners, chime in. Let's see. Nope. Biggie said bar. Nope. What is this? What are these lines at the top called? There we go. My guy, Ace Boogie. Candlestick. There we go. Cool. Let's go to the next one. And Ace Boogie got it. Wicks. Oh, you said candle. My bad. Couldn't see. Okay. We good. Still simple candlesticks. You can see what they look like when none of them are open, just simply closed. So so just what we just saw, this wick at the top is longer than the one at the bottom. So possibly, which is this in the green. So that's good. And then the wick at the top is a little bit longer. So it could be for, small upswing. If this was day trading, it could be as quick as a couple seconds, and this may pop up. Okay. Now, let me open this up. What is this one? I know it kind of looks the same, but you can see the difference. We just went over this. Ghostman said my glasses took them off. I tried to make it as close as possible. Can y'all see that? There we go. Hey, my man, Biggie Sharp coming through again. There's your bar chart. Okay. My man. Oh, that's funny. This is simply another picture of a bar chart right there. You can see it a little bit more clearly right there. There you go. And this is your standard what? What is this? This is our standard, the easiest chart to read. Line chart. There you go. Hey, we in it. So it's just that simple. Like I said, I'm not trying to insult anyone's intelligence. Not at all. But we got to go through this as much as possible. So we almost done with the video so we can get to the big money to where y'all can tell me how I'm going to spend my money on the market. Can't believe I agreed to this. But let's continue. Here we go. Here we go. Fair use.
You've chosen a stock or ETF you want to invest in, and you know how many shares you want to buy. Now, you've just got to place the order. For novice investors, that may be trickier than it seems, because before placing that order, they have to choose an order type. Simply put, order types are instructions to your broker about how to execute your trade. You don't need to know the complicated jargon or hand signals traders used to use on the floor of the New York Stock Exchange, but you should understand the basic order types and how they affect your trade.
So remember, like I said, that the pit, it's not required anymore. You could do that from your phone. So this is where we're about to go over the different, market, limit, purchases, so on and so forth. So this is going to be good because this is what you'll see on most of the drop downs on these trading apps. It'll say, do you want to place a market order, a limit order, so on and so forth. This is where we're at right now. Here we go.
Let's focus on the basics of how an order is placed. Then, 3 common order types: market orders, limit orders, and stop orders. First up, how an order is placed. When you select buy or sell, your order is sent to your broker, who attempts to fill it on the market. Prices can change constantly, and the system for routing orders has lots of moving parts, all of which impact how quickly and at what price your order is actually filled. Using the right order type can impact these factors and make a big difference in whether your trade works the way you intended. So it's important to understand the main order types. Let's start with market order. This order type indicates that you want your order filled immediately at the next available price. If prices are changing rapidly, the next available price could be different than the price quoted when you initially placed the order. Investors who use market orders tend to be more concerned about the speed of a trade than the price. The lack of restriction on price means this order type has the best chance of being filled, but it also has the risk of being filled at a different price. For example, if the price is plummeting and other investors are also trying to sell, the price could drop further by the time the market order is filled. This could lead to a share sale at a price lower than what the investor intended. Likewise, if an investor places a market order after hours, the price could be very different when the order is filled at market open. Because of this, investors typically use market orders during trading hours and in highly liquid markets. This increases the chances of getting an order filled closer to the requested price. If your priority is to buy or sell at an exact price or better, you may want to use a limit order instead. With a limit order, you specify a price, and the order won't be filled until the stock can be bought or sold at that price or better. However, because of the price restriction, there's no guarantee the order will be filled quickly or at all. Investors generally use limit orders when they have a target entry or exit price and are willing to wait for the market to move in their favor.
So, and this is actually a good strategy because if you know the exact price, then yeah, you place that limit order, and if that stock hits your money, your limit order money requirement, then it'll automatically go ahead and buy or sell for you. But sometimes, let's say you set your limit at $150, and the stock is currently trading at like 155. You could easily follow a line chart or a candlestick chart, and you can see your point set at 150, and it'll just keep doing this. Like it'll go right over it, and it'll never hit 150. So you'll never be able to purchase it at that time. And depending on if it's good for the day, then it may go ahead and expire, and you won't be able to purchase that stock if you set a limit. But if you set the market, then you buy it, you can purchase it right then and there. But the price may change during the time that you're actually buying that actual stock. So it's a give or take depending on if you're willing to wait for the limit to hit your particular point, cool. But if it doesn't hit that, then you just ass out of a trade. And then you could just go ahead and use market and say that it hit 151, and you put in that market order for 151, and now you have you earn a little bit of the company now because you made the purchase. And I know a lot of people that use limit orders on multiple stocks throughout the day, and they'll leave it alone because they already have that money allotted to that particular company if it hits or not, and they don't really worry about it. So it's a strategy that you can use. I use limit orders sometimes depending on the company. Most of the time, if I want to buy a stock, it's something that I already bought into. So I'm not really worried about the price. I just know that this company has been working for me. So I go ahead and purchase it. Market order. Okay. Let's see. Hold on. Let me see here. Sir says, sometimes I miss my limit, buy/sell by a couple. Yeah, man. It could literally, it could be going right over your price point. It's like, and you're like, oh man, well, I'll try again tomorrow. So, but eventually you'll end up owning some of that company. So, but it is definitely important for day traders and shit like that, man. They take that shit serious. So Let's continue.
Let's say, for example, that a stock is currently trading at $55, but an investor believes it'd be a good value at $50 or less. This investor could place a limit order to buy the stock at $50.
There you go.
If the stock never reaches the limit price, the order would never be filled. If the stock does drop to $50 or below, with enough volume available at that price, the order will fill and the investor will buy the stock for $50 or less. The last order type is a stop order, which is actually just a market or limit order with an activation price that triggers the order. When the stock reaches the activation price, the order is executed according to its order type. Stop orders can be used in various ways. Investors can use buy stop orders to buy securities when they reach the activation price, or they can use sell stop orders when trying to limit potential loss in an investment. For example, an investor might set a sell stop order on a stock she owns, specifying that if the stock falls to a certain price or lower, it'll trigger an order to sell the stock at the next available market price. This could possibly prevent more serious losses by getting out before the stock falls too far. There are 3 types of stop orders: stop market, stop limit, and trailing stop. If the investor in this example uses a stop market order, when the trigger price or lower is reached, an order will be placed to sell the stock at the next available price. The benefit is that a stop market order may help get the investor out of the falling position quickly. The risk is that the next available price could be lower than what the investor anticipated. If the investor uses a stop limit order, when the stock falls to the stop price, it'll trigger an order that seeks to fill at the limit price or better. A potential benefit is being able to control what price the stock is sold at, but there's also a risk of the stock falling so quickly that the stop is triggered, but the limit order is never filled because the stock has fallen below the limit price.
Jesus. And it's like I said, it's a delicate dance, man. It's like doing the tango. This shit is tough. So you have to be very mindful of what you get your ass into, because this is real money once you get on that damn stock market. Jesus. Let's continue. Fair use.
Investors can also use a trailing stop order. With a trailing stop order, instead of setting a specific activation price, you set a trailing amount or a certain dollar amount or percentage away from the market price. On a long position, you typically set a trailing stop below the market price in an attempt to lock in profits as the stock rises. So, let's say you own a stock trading at $100 and place a trailing stop order $5 below the current price. If the stock price increases to $110, the stop price would rise from $95 to $105, staying $5 below the market price. But if the stock were to start slipping, the trailing price would stay at $105, minimizing your potential loss on the position. Each order type has its advantages and disadvantages. Investors should plan ahead and decide which type of order is right for each scenario.
Man, that was a whole lot of information in a short amount of time. That was absolutely amazing. Very simple, easy to understand. You know what a market limit stop order is. Very simple. I love that video. And I want you guys to go back, go to that Charles Schwab YouTube and check it out, man. I mean, goodness gracious. Succinct. Ooh, man. Let's go back. Let's open up. All right, we need to purchase some more stocks because we already spent $8,000 on Nvidia. I'm messing that shit up on purpose now. Let's see here. All right, so what we invested in? I'm trying not to put my own, recommendations. Y'all got to let me know what's next. We got Nvidia, whatever, Medea. Well, let me see here. Ghost Bear said, all 100% risk without inside intel, too risky. Yeah, we ain't trying to go to jail. The only people that don't go to jail for insider trading is rich people. So Internet Passport, $5 super chat. Thank you for breaking the drought. This information should be taught in schools/colleges. Keep it up, brother. Media man, stay strong. Thanks for the value. I appreciate it, man. Thank you for the support. I greatly appreciate it. Let's see here. Sir said, nope, no crypto. We doing this on the market, this market. So just throw some out there. Like, we got to do this because this is about time to get up out of here. Y'all ain't sending in no companies. We said NVIDIA, whatever. Let's see here. Come on. We need something. Somebody said PM. What's PM? Philip Morris International. Consumer non-durables. Tobacco. Philip Morris International is a holding company which engages in the business of delivering a smoke-free future and involving a portfolio for the long term to include products outside of the tobacco and nicotine sector. It operates through the following geographical segments. Okay. Worldwide. So is it tobacco or is it trying to replace smoke-free future? Let me see what these warlocks doing. Market capitalization. Okay. The dividend is not looking too good. All right. So what we doing? Philip Morris. We buying a little bit of that. Somebody just hold on. SMH. Well, we already in the conductor business, so we got our NVIDIA, whatever. So let's leave it at that. Let's go. I'm surprised nobody mentioned like Apple. Nobody mentioned SPY, Microsoft, Tesla, Amazon, none of that. And we still got a little over what? $15,000 left over. Let's see, TKO. TKO Group Holdings. TKO Group Holdings Incorporated engages in the provision of sports and entertainment. Its businesses include the Ultimate Fighting Championship, okay, and World Wrestling Entertainment. The company was founded on March 29, 2023, and is headquartered in New York. Oh, that's new. But I just watched that Dana White interview with Shannon Sharp. So what's this? What does it look like? Let's see here. Hey, for only a year, that's pretty high price point. Huh. What y'all think? Want a little bit in TKO? Let's see. Sir said put 4K in Apple, 2.5K in Tesla, 1.5K in KGC. Put 5,000 in SPY. Let's put some 4K in Apple. What is Apple? 210. Let me get my little stock calculator out. Hey, about 1 second. Let me. Okay, let's do 25. Apple. That's pretty good. So let's get a piece. Yeah, stabilized. That's right. Apple is in there. So our portfolio right here, you guys see they already set up. So let's go back. Anybody else? Sir said TKO. So y'all believe in TKO? Okay. I like UFC. How much we putting in there? How much y'all believe in TKO? What we doing? What we doing? What we doing? Let's see here. ESCO 215. I would do a Google trend search on Miss Martial Arts, etc. If no one is searching for STFF like it, are you saying stuff like it? It's possibly not going to pick up short term. Okay, so you're saying it'd be a long term investment? Sir, the chart looks good. I will be dropping 1,200 on them tomorrow. Okay. What we doing now? You said SPY. It's my favorite. Pretty pricey, but we could put let's grab. Let's see here. Let's grab 5,000 worth. Yeah, that'd be good. We got TKO in there. So somebody said 3 shares of TKO. That's it. That's all we doing. Somebody said drop 100. Keep it simple. TKO. How much is it? I was trying to buy 10,000. No. Let's how about 25? Is that fair? TKO 25 just to start. This is a fairly new company, but everybody like UFC. So WWE, I don't know if they're as big as they used to be. I'm not sure who watches WWE. I know it's still on. So let me know. Let me know. All right. I guess we good. Let's see what we're looking like. So those are our companies that we're starting off with. Well, we got one more. We still got a couple ducats that we could spend. We got about, I want to say about $2,000, $3,000 left. What's our last company? So we got about $3,000 left before we start this for tomorrow. Oh, thank you, Project Leroy. $2 super chat. Medium man, look at NRG. Okay. And since you put in the super chat, I got you, brother. G Energy. All right. NRG Energy engages in the production, sale, and distribution of energy and energy services. It provides through the following segments: generation, retail, and corporate. The generation segment includes all power plant activities, domestic and international, as well as renewables. Okay. And then the corporate segment includes residential solar and electric vehicle services. Okay. Don't they have a building in Texas? I think I just passed it. I was in the Woodlands yesterday. I think I seen NRG. All right. NRG. How much would they trade at? 77. So I think we can afford. Let's go 5 with them. Yeah, we can go up. Ooh, cool. And that's for you, Project Leroy. We get one more in here, and then we'll shut this down. I don't know. You guys tell me. Broken Blade said, would it be wise to invest in a silver mining company? See here. Crochet Starnes. WWE signed a nice deal to broadcast on Netflix. Oh, is that a live broadcast? I'm pretty sure. If that's the case, that's pretty big. Okay, y'all talking. CMG. Chipotle. Everybody love Chipotle. We getting a little bit of that. There you go. Ali said $5 super chat said, "What's up, bro? This is good info. What about BYO, Build Your Own Dream?" Is that a company? Are you talking about Beyond? That's not it. That's not it, is it? Beyond Inc. engages in the provision of an e-commerce platform. It offers furniture and home furnishing products and services. The company was founded May 5th, 1997. I'm pretty sure that's not what you're talking about. Is it, Ali? Oh, okay. Yeah, it's not showing up on there for some odd reason. The Investopedia may be limited. It's all good. Thanks. All right. Definite G. $2 super chat. What about Walmart? Oops. Okay. Yeah, we can end it off here. Let's see. Yeah, that'll be our last. Okay. Cool. Thank you for those who put in the super chats. All right. So that's what we're looking at. We're going to stop right there, and then we'll add more money at the beginning of the next month from our 100,000. But as soon as this pops up in the morning, I'll go ahead and make a community post to let you guys know. So we got NVIDIA Corp, 65 shares, Apple, 25 shares, SPY, which is our ETF, 10 shares. TKO, UFC, WWE, 25 shares. NRG, Energy, 20. And Walmart with 20. Okay. All right. And that's required storm tonight. Super says a great live stream. No need to clip it up. I want to watch this tomorrow while I'm working. Okay, cool. And then this is the end. Hold on. Thank you, brother. So that's where we at. And like I said, I will make sure that I update this and put it on the community post so you guys can know when those trades go through tomorrow. I got to remind myself. Hold on, let me pull this up real quick. Give me 1 second. Yeah, I got it. I got it. My bad, bro. Yeah, I did. I got all the information. I sent it to my girl, and yeah, she likes it. The places that you mentioned, absolutely amazing, brother. Thank you for the information. And did you? Oh wait, I'm about to. Yeah, we'll purchase today. So thank you, brother. Appreciate that, my man. Let's see here. Ali, $2 super chat said correction. BYD. Oh, okay. Well, should we maybe next month? Hold on, let me pull this up. I got to put in the security code real quick. 1 second, guys. What is it? Excuse me. Come on. It's thinking, my bad. I'm trying to pull up my account. It's not. It's thinking. Hopefully we ain't been on too long. God dang it. Let me restart. Now it's a functionality unavailable. God dang it. I got $500 in there. Hold on. I'm trying to pull this up so we can do this today as well. Hold on. Okay. All right. So let's go to trade. Give me a second. All right. So this is my account. Like I told you guys, I put 500 ducats of my own bread in here. So how y'all gonna spend my money? Where y'all putting my $500? What we doing? And like I said, super chats always have free reign. Y'all the first to, let me know. So if you know where my money is supposed to go, you gotta let me know. So, hey, let me know right now. We'll wait. I got 500 ducats in there, shillings, coins. What y'all gonna do with my bread, man? Hold on, what we gonna do? If not, I'm gonna choose, and you know where I'm going. So, Oh man. No recommendations? Let's see here. Let's see. VTI. That's 268. Yeah, it's getting late. It's weird doing okay, let's see here. Are there any buy-ins? Buy-ins. That's a minimum. It's a 3,000 buy-in. So we asked out on this one. What else? DraftKings. Betting is becoming I mean, I hear it all the time. It's pretty cheap too. What y'all think? We getting some DraftKings in there? Okay, you got 3 DraftKings. What else we doing? WN. What JD? What is WN? Which one is that? What is this? Nothing. Yeah, I'm gonna buy. Sure. I don't see it up here. Waste management. Somebody said Nike on the other stream. So what does Nike trade at? So that's 75. That's not bad. I could buy a 2-piece. It's a Nike stock if y'all want. What about Apple? Apple trade at 211. I can afford it. I got $385 left. So we getting a little piece of a bite of the apple. That's what we doing. Okay, never go wrong with Apple. Let's get a piece. Oops. Get a bite. Now I got $174 left. Where I'm at, how I'm spending this next 175. Thank you. And Ancient became a YouTube member. Thank you, brother. Love the members, YouTube members. Appreciate that. Let me know what we doing. I got $174 left. It's up to y'all. And H just said, go for VKTX. Viking Therapeutics. What is this? Biotechnology. Okay. Okay, a little bit stable. All right, all right. What they got? $53. Well, since you became a member, let's go ahead and is this ain't what's that new blood pressure whatever? Wait, that's what I want to see how they do against the S&P. Okay. S&P healthcare. Okay, it's on par, but the S&P is shit. It's pretty good. All right. Let's buy two of those. Get a little bit. Okay, place another order. We got $68 left. Somebody mentioned it was Walmart. What was Walmart trading at? 67. I want to get more than one. What else is out there for cheap? We got it for cheap. Let's see here. What's cheap? What's cheap? Let me look at my notes here. LYV. Live Nation. Okay. 95, huh? Too expensive now. GME. Is that GameStop? GameStop. Y'all still believing in GameStop? $24. Archer Daniels Midland. Damn. This is from a year. What happened? I'm not too sold on this one. Let's see here. FNKO. Funko. $10. What is this? Oh no. Wait. We need some shit. And this is a Japanese company. F it. All right, we'll leave it at that. Shit. We out. All right, so we got ours in there. Okay, cool. Sheesh. Okay, hold on. Let me pull this up real quick. And obviously, this is not the way that I would pick stocks regularly. But yeah. So I'll definitely have to do some research. Let's see, summary, where we at? And I will let y'all know when these go through. Order status. Let me make sure I set a timer because I got to work. Still thinking. Cool. All right. So we good. Let's go ahead and get out of here. So, like I said, guys, I think this is a good exercise. And this was the easy part, just putting in the purchases. But throughout every month and every live stream, we're going to check the progress on both accounts, the $500 and also the Investopedia account, to see how well we're doing. And then next month, we will do a whole show simply based off of options. I think we could learn a lot together, doing that process as well. And it may be able to increase our income on the Investopedia simulator if we can hit it big, so to speak. So I think it'll be good. So yeah, I think it'll be great. I'm gonna do that. Why is this still thinking? I was trying to show y'all a look on the stocks that you picked for me. So it's not going through. That's trash. Hold on. No. Okay. We look at the position, see if they updated that. No. 1 second. I'm looking. Hold on, let me pull up a summary. I'm going to have to put this the way I wanted to read out because this Charles Schwab account is pretty weird. I'm going to have to get used to this. All right, let's stop here. Cool. We good. Don't worry about it. But yeah, so we're going to put together options discussion for a live stream in the future. But we're going to check this tomorrow morning. So be on the lookout on the community post for everything to pop up and let you guys know that the trades went through and we're on our way. So let's see if we can increase our standing on the Investopedia simulator. And let's see if you guys can grow my account from $500. We're going to see at the end of the year. This is going to be a good live stream. But again, thank you to those who sent in super chats and cash apps. I greatly appreciate it. On our way to 40,000 subscribers. I want you guys to enjoy the rest of your week. I'm going to be out of town, of course, for the 4th of July. But I would try and sneak in a live stream prior to that before I get on the plane and talk about I got some videos queued up that I'm ready to discuss. But yeah, so this is your weekend, your Sunday. So go ahead and relax, enjoy, and I'm going to get something to eat. We're going to relax outside for a little bit, and then I'm going to try and hit the gym. Yeah, we'll hit the gym. Okay. Yeah, we'll hit the gym today. So thank you guys again. I appreciate the support. I will be back hopefully this week, and God bless. Medium Man out, and I will leave y'all with what I got. Let me see here. What didn't I play? Fast car. I didn't get to finish that. But here we go. I'm out. Thank y'all. God bless. Peace.
Fast car. I wanted to get to anywhere. Maybe we can make zero and nothing to lose. Maybe we'll make something. Me, myself, I remember when we were driving in your car. Speed so fast, I felt like I was strong. City lights laid out.